and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down day. We are off session lows. However, stocks are slumping after Fed Chair Jay Powell weighed an earlier end to bond tapering. Traders boosting their wagers on the pace of interest rate increases. Powell also told a Senate Banking Committee that it is time to stop using the word transitory to describe inflation. Today, the Dow, the S&P, Nasdaq, all declining. S&P down now by 59 points, down 1.3%. The Dow is down 485, down 1.4%. Nasdaq down 193, lower by 1.2%. 10-year right now, 1.44%. Gold is down 0.5%, lower by $8 the ounce at $17.76. And West Texas Intermediate crude now lower by 6%, $65.75 a barrel. The slump for natural gas continues today, down another 3.7% to $4.67 per million BTUs. As for the market backdrop, Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments.
You hear Powell coming out and using that word uncertainty. We know the markets don't like that word, so that's going to add some volatility. You have the Moderna CEO coming out and saying that things are not going to be good. That's going to feed into the psyche of the consumer. We've talked many times about how we think the consumer is leading this economy right now, and that strength of the consumer we need to rely on.
She mentioned Moderna, that stock lower now by 3.4%. AT&T shares tumbling to a 12-year low after the company's chief executive officer of communications told investors at a conference he expects customer growth to slow. AT&T down now by 4.8%. David Marcus, one of the top executives at Meta Platforms and co-creator of the yet-to-be-launched Diem digital currency, is leaving the company after 7 years. Facebook, Meta, lower by 3.1%. That's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week as we get ready to wrap up the month of November. We are live in our Bloomberg Interactive Brokers studio. We are streaming on YouTube. Carol Masser, Tim Stenovic on this Tuesday, November 30th. And it's really all about Fed Chief Jay Powell today.
Yeah, he certainly made news and got investors' attention, causing stocks to slump when he made his comments earlier today, Carol, that he suggested a faster pace of curbing bond purchases might be warranted.
Yeah, exactly. Really laying some stuff out. We're going to talk about this a lot. We're also going to talk about retail, Cyber Monday results with Harley Finkelstein. He's the president over at Shopify. Initially, Black Friday wasn't so great for a lot of these e-tailers, if you will, but we'll see what he has to say.
What is Black Friday anyway?
Isn't it all just like a black mold?
Well, if you look at Shopify's press release, it goes around the world over like 4 days because of time zones.
Black Friday / Cyber Monday.
Yeah. The holiday shopping season is 2 months.
It's up and running, and it continues. We're going to talk to you about the crypto vigilantes that are hunting scams in a $100 billion market. That is among our most read. It's also our Bloomberg Big Take.
Another most read, a secretive robot. It's helping one investment firm pick winners. One of my favorite cookie places, Levain Bakery, it helped pick.
Are you serious?
I'm serious.
All right, this is really cool stuff. We're also going to check in. It's Giving Tuesday. The Red President, Chief Operating Officer, Jennifer Lotito, she is going to be with us on what they are up to. And then we're going to check in with the president of L'Oreal Paris USA and their Women of Worth program. I've been involved in it in years past, and it's pretty remarkable. So cool stuff.
Looking forward to that.
All right, let's get to the Market Drivers Report. Let's set your business week agenda on this Tuesday. Dave Wilson, stocks editor at Bloomberg News in our Interactive Broker studio. Anna Wong, chief U.S. economist at Bloomberg Economics in our Washington, D.C. bureau. But I think safe to say we've got to kick off with a little bit of sound from the Fed Chief Jay Powell, who basically said, man, it's time to stop using a certain term. Check it out.
The word transitory has different meanings to different people. I think it's probably a good time to retire that word and try to explain more clearly what we mean.
I guess this is what we mean by the Great Resignation. We have to retire this word.
Transitory is resigning. I like what you did there, Carol.
Thank you very much. Working on that. All right, Dave Wilson, so come on in. We're going to get to Jay Powell's comments in just a moment. But in terms of market reaction, what have we seen?
Oh, definitely weakness across the board, really. All 11 of the main industry groups in the S&P 500 are lower. You look at individual stocks at the moment, only 27 of them are up. So it is really a broad-based decline driven by the idea that, yes, the Fed's going to take away the punch bowl a little bit faster, perhaps, than people were anticipating. Cutting back on their bond buying, eliminating it eventually, and then you get to what happens to interest rates. So, you put that all together, and it underscores why we have so much weakness in the market. One group worth noting, Charlie Pellet was talking about AT&T at its lowest price since 2009. They're looking for wireless growth to slow next year and beyond. They figure, people aren't going to be so quick to go for 5G service or whatever, and that stock's taking a hit down 4.6%. And you've got Verizon and T-Mobile US lower as well.
Hey, Anna, come on in here. Anna Wong, chief U.S. economist at Bloomberg Economics, joining us from D.C. There seems to be this kind of tension when I think about Fed Chair Powell's comments today, while at the same time the U.S. and the entire world, for that matter, are dealing with this new variant that could, in fact, lead to lockdowns. So help explain the tension between what's going on when it comes to the virus and what that could do to the economy, and what Fed Chair Powell said earlier today, which is essentially saying, hey, the economy is doing so well, we're going to speed up this bond buying. Or speed up halting it, I should say.
Right. So I think that the Omicron introduced downside risks to growth and also upside risks to inflation. Supply chain bottlenecks likely would come back again if our trading partners were to impose lockdown and travel bans. But that increase in risk is actually completely consistent with the Fed's approach to accelerating the taper purchase, because the purpose of accelerating the taper is to open up the possibility, just a possibility, not a certainty, of earlier liftoff starting in March.
Anna, this is what was interesting, because he did say, perhaps we'll do this. I mean, there's always those caveats, and he said, we've got to get through some key economic reports, including the Friday jobs report, right, and key other metrics on inflation, and then there's, of course, the variance. So he's always putting out those caveats, right?
Right, but that's what I'm saying, that the caveats, the uncertainty itself, it's what's causing this acceleration in taper. In order to get to, to be able to be ready to hike rates if inflation turns out to be higher, then you need to taper faster. But that does not necessarily mean that the Fed is more hawkish about liftoff. It's very well that next March, after they finish tapering, they could still delay liftoff until a year later if the economy tanked.
Let's not forget, too, rates are still going to be low on a historic basis. So come on, it's going to be still easy monetary policy. Dave Wilson, how does that then ultimately maybe translate into what we see in the financial markets? Obviously, investors pretty bummed. It's hard to be a bull right now, but
you're talking about a pace of change. It's not just that investors don't like change. They'd rather not see it come faster as opposed to slower, and that's sort of where we are at this point.
I like to rip the Band-Aid off. I'm just going to say.
Just do it.
Well, no, that's you. I mean, not everybody is so inclined, so, that's at work as well in terms of what we're seeing in stocks. I mean, and there's real concern. And when you talk about supply chain issues, that sort of thing, we know companies have been dealing with that for several quarters now. So, does that intensify? Does that get to be more of an issue? Are companies able to pass on their higher costs? Those are the kinds of questions you have to deal with here.
Yeah, and meanwhile, we've seen record profits, right? I mean, we saw an incredible growth in profits. It's a great story. Maybe we'll talk about it a little bit later on, that even with these pressures on companies, they seem to be doing okay. Dave's going to be back with his chart and stock of the day, and our thanks to Anna Wong joining us on Jay Powell.
And it's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
Today's number is $1 billion. Chinese President Xi Jinping pledging to supply another 1 billion doses of vaccines to African countries as the world's poorest continent grapples with the emergence of the Omicron COVID-19 variant. Xi saying 600 million doses will be donated, while the rest will be jointly produced by Chinese enterprises in African countries.
Makes me think what Andy Brown said yesterday about the efficacy of the Chinese vaccines. Not as effective as mRNA vaccines that we see in Europe and the United States.
No, it's a really good point. So will it have the impact that maybe we're...
Okay, guys, as you can see, position open, long position on euro at 113.08.5. Well done, guys. All of you who follow my trades and decided to trade euro against United States dollar, stay with me, and we'll guide you through this trade. At this moment, we will hold position, and we will see as soon as it will move higher, we will place stop for our profit. So if it will move lower, we will not lose our profit on it. Okay? I'll speak to you later. For other people who want to get the strategy, you can go to company.co.uk and get our strategy. Stay safe.
For lawmakers on Capitol Hill, Bloomberg's Amy Morris says they have to reach agreement on a stopgap funding bill by Friday.
Lawmakers have discussed a stopgap measure to fund the government into January, but Republicans want something longer into February or later, while negotiators are trying to start bipartisan talks on a full spending deal. House lawmakers will have to introduce something soon to give both chambers time to consider it. And sources tell Bloomberg News the Office of Management and Budget has sent Congress technical assistance to prevent disruptions under a short-term stopgap. In Washington, I'm Amy Morris, Bloomberg Radio.
Attorneys have begun sifting through potential jurors for the trial of a suburban Minneapolis police officer who says she meant to use her taser instead of a gun when she killed Dante Wright, a black motorist. Former officer Kim Potter is charged with manslaughter. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much, Nancy. One story popping up on the Bloomberg by our Sophie Alexander has to do with Bill and Melinda Gates, Melinda French Gates, Bill Gates, of course. We know that they said that they were going to separate. Was it just earlier this year?
Yeah, 7 months ago.
7 months ago. Okay. And that was really, I think, a shock to a lot of people.
It was. We were on air when it was announced, and I think it was a shock to everybody.
Kind of left us speechless. And we feel for them because that's certainly a tough thing for any family to go through. But it had repercussions in a lot of different ways because we know that they have been incredibly philanthropic together through their foundation.
Yeah, there were a lot of questions about the Bill and Melinda Gates Foundation, how those assets would be managed, and of course the giving pledge as well. Sophie's story talks a little bit about the individual plans for giving away their fortunes. They have a $50 billion foundation. Now, the couple initially wrote a letter back in 2010 for the giving pledge. Remember, this is a promise that people give away the majority of their money in their lifetime or their wills. We've seen many billionaires sign on to that. On Tuesday, the pledge's website was updated to include their new separate letters. So Gates has a letter, and then Melinda French Gates has a letter as well.
And Gates is saying he'll continue to focus his philanthropy on the Bill and Melinda Gates Foundation's work. The ex-couple founded that organization decades ago. It's really grown into a behemoth when it comes to the world of philanthropy. And Gates alone has a net worth of $136.8 billion. French Gates is worth $11.7 billion, according to our Bloomberg Billionaires Index.
In July, months after the couple announced their split and said little would change at the foundation, Gates and French Gates made public major revisions, along with committing another $15 billion and also announcing a plan for new trustees. The pair also said that they may not be able to work together in the future. Raising the possibility that French Gates will actually exit.
And in her new giving pledge letter, she talks about the Gates Foundation, which she helped found, but also her newer philanthropic arm, Pivotal Ventures, which is an investment firm mainly focused on gender equality. So they're definitely kind of putting in their stakes about where they want to focus their efforts. So not necessarily walking away from all of it, but also doing their own thing. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stenovic, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are off session lows with the Dow, the S&P, Nasdaq all remaining in the red. Stocks slumped after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their bets on the pace of interest rate hikes. And with Powell speaking right here on Bloomberg Radio, he also told a Senate Banking Committee that it is time to stop using the word transitory to describe inflation. The S&P down 61, down 1.3%. The Dow down 490, down 1.4%. Nasdaq down 201, down 1.3%. The Nasdaq 100 index down 1.2%. 10-year yield right now 1.44%. Spot gold down 0.5%, 17.75 the ounce, and West Texas Intermediate crude down 5.4%, 66.22 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that update. Well, it is Giving Tuesday, and one company that is working to engage businesses and people in the AIDS and COVID pandemics is Red. They do it by partnering with brands such as Amazon, Apple, Louis Vuitton, Starbucks, so many more companies. Here with more on the work they are doing and the impact they are having is Red President and Chief Operating Officer Jennifer Lotito. She joins us via Zoom in New York City. Red, by the way, their sister organization of One, which was founded by Bono and other activists to end extreme poverty and preventable diseases. So they really are just all in on fixing what ails our world. Jennifer, good to have you here with Tim and myself. How are you?
I'm great. Thank you so much. And thank you so much for having me.
No, absolutely. Great to have you here, and so relevant in terms of what the world continues to fight here. You work with, a lot of brands. Tell us a little bit of how you work, how those partnerships ultimately end up in raising a ton of money for some really good causes.
Yeah, absolutely. So for 15 years, Red has been focused on fighting HIV and AIDS and working with the biggest companies in the world in order to do that. That continues to be an important priority for us. But what we've realized at this point is that you're never going to win the battle against HIV if you don't also take on the other battle that the world is facing in COVID. So we have really expanded our mission to include funding for COVID vaccines, treatment, and testing, in addition to all of the funding and support that we've given for HIV. And I think from a Red perspective, what's really important is we work with those companies not only to generate the money, but to generate the heat, to get people to care, to have conversations like this.
How do you get people, to care in a pandemic when they're facing it each and every day? Like the thing is it's a different challenge than having someone care about something that ails people half a world away, which is, I think, a way a lot of people thought about Red previously.
Absolutely, and it's how people had thought about HIV, and unfortunately, we're starting to make the same mistakes with COVID. I think that with HIV, a lot of people think that is a crisis that is over. It is absolutely not over. We know how to end that. We have the tools that we need to end it. And I think from a Red perspective, what's really important to understand is that we have to keep the heat on it. Because right now we're in a precarious position where we do not have equitable access to vaccines. That's what this campaign is aiming to do, is to get people to care, to get people to look at this as a global issue. Obviously right now the headlines are being dominated by another variant. That variant is because we do not have vaccines in low-income countries. So while we're doing boosters here in the States and other places, less than 10% of low-income countries have gotten their first shot. So from a Red perspective, our campaign, the Code Red campaign, is about engaging consumers, engaging customers of these brands to do, whether it is our rewards campaign. Today is Giving Tuesday. We have an amazing idea, which is to allow people to use their credit card rewards points. They can be turned into cash donations, and those donations can go right to not only buying the vaccines, but very importantly, getting those vaccines distributed where they're needed most.
Jennifer, when we do the numbers, and we often do it here at Bloomberg about the number of people who've lost their lives to COVID specifically, and it's just staggering in terms of where we are. I think in terms of HIV, I think we all thought it was more under control, but when you look at some of the numbers globally, I was just looking at some stats, approximately 37.6 million people across the globe with HIV in 2020. Of these, 35.9 million were adults, 1.7 million were children. It's just a reminder, we have a long way to go to really getting this out of our system, out of it being a really significant problem.
Absolutely. And I think that, which is why it's so important when we are very focused on COVID to not overlook the impact that we've had for, again, Red's been doing it 15 years. The disease has been around for several decades. There has been incredible progress. We are seeing people, AIDS is no longer a death sentence. If you get diagnosed with HIV, there is treatment available that will stop you from passing that on to your partner, and most importantly, passing it along to your child so that we can see an HIV-free generation in our future. We will not do that if we don't keep up the work that we're doing to fund the HIV programs, as well as now what's needed to end the COVID pandemic. And again, that's what this campaign is meant to do, engage people. We have, Red is known for our incredible products, so you can now shop Red. And, I would encourage everybody to go to codered.org, and you can find out how to use your credit card rewards points, as well as shop, as well as game. You can even play Minecraft, and we're really about making sure that we are giving customers and employees of the world's biggest brands the ability to help end this pandemic.
Jennifer, how long do you think Red will have to exist?
That's an interesting question. I mean, at one point we talked about, wouldn't it be amazing if we put ourselves out of business? I think that Red is a really innovative model. And I think that right now, again, unfortunately, we're still battling the HIV pandemic. We are now battling COVID. I don't know what's going to happen, if there's going to be another one coming around the corner. But I think what's really special and unique about Red is our model. So whether our mission changes, I think that we will continue to find ways to innovate that model and ensure that we're engaging the world's biggest companies along with their customers.
All right, we're going to leave it on that note. Hey, Jennifer, good luck with the mission. And again, codered.org. You can find out more information there, and certainly shop Code Red, as she talked about. She is, of course, Jennifer Lotito. She's President and Chief Operating Officer at Red, joining us via Zoom in New York City. Great question that you asked. Right, the goal is to maybe put yourself out of business.
Exactly.
But it does, when I think about pandemics, right, we've been told there's going to be more.
Right, and if you're not focusing on HIV/AIDS or coronavirus and COVID-19, malaria, right? Other things that have to be eradicated, poverty.
There's just so many issues out there. All right, folks, just getting started on this Tuesday. Carol Master, Tim Stanovic, and we are Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hello.
Hi.
It's Bloomberg Business Week.
It is, and we're going to talk a little bit about COVID in just a few minutes, the new variant that is making its way around the world.
Yeah, and we're hearing a lot in the last couple of days from the head of Pfizer, the head of Moderna, trying to understand whether or not existing vaccines, what they will mean for this new variant.
Key phrase, wait and see.
Wait and see. I've heard that a lot. All right, no, we don't have to wait and see, though, to find out what's going on in the markets. Let's head on over to Charlie Pellet.
All right, thank you very much. And here's what's going on. We've got the S&P down 61 now, have been down as many as 90 points, as much as 1.9%. Right now, the S&P down 1.3%. We'll give you the why in a moment. Let's get through the numbers with the Dow down 496 now, down 1.4%. Nasdaq down 191. That is a decline of 1.2%. 10-year up 17 seconds. 10-year yield right now 1.44%. Stocks slumped after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their wagers on the pace of interest rate hikes. His remarks carried live here on Bloomberg Radio. You heard him tell a Senate Banking Committee this morning that it is time to stop using the word transitory to describe inflation. Crude oil dropping another 5.2% today. West Texas Intermediate crude 66.33 a barrel. Natural gas continues its slump, down another 5.7%. Gold down 0.5%, 17.75 the ounce. And again, that 10-year yield, 1.44%. The University of Oxford says there is no evidence existing vaccines won't provide some protection against the Omicron variant as scientists scramble to assess the new COVID-19 mutation. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
I think it's likely that breakthrough infections are probably going to be more common with the Omicron variant, but they may be not severe in a fully vaccinated person, meaning that the vaccine still protects you against hospitalization and death, which is what they want us to do, what we want them to do. So we may need to adjust the vaccine, but I think it's important to remember that what we're trying to do is keep people out of the hospital, and it's very hard for any variant to erase everything a vaccine does for you.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine stocks, Pfizer up now by 3%. Its German partner BioNTech, its ADRs down 2.1%. AstraZeneca's ADRs down 0.8%. Moderna down now by 3.4%. Johnson & Johnson down 1.5%. Lots of earnings after the bell today, including NetApp, Hewlett-Packard Enterprise, Global Foundries, Box Inc., Salesforce.com, and Zscaler. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, a lot going on when it comes to COVID. The EU has recorded at least 44 confirmed cases of the Omicron variant in 11 countries. Does say that all of the people infected are asymptomatic, showing only mild symptoms. Oxford saying there's no evidence that the new variant defeats the vaccine it developed with AstraZeneca. And Moderna predicting vaccines will struggle while with this variant, while the World Health Organization warned that the variant could fuel a fresh surge in infections with severe consequences.
All of this happening, Carol, while the U.S. CDC is considering tightening travel restrictions and rules. Germany taking a step closer toward making vaccines compulsory. So a slew of news happening around the world as a result of this variant.
I feel like we've been here before. All right, so let's see what John Larriman has to say. He's our health team editor at Bloomberg News on the phone from Boston. John, a lot going on, trying to understand. It's confusing financial markets. It's confusing we mere mortals. I don't know. What? How do you?
The day, isn't it?
It's only Tuesday. Yeah, it's only Tuesday.
Yeah, it's only, I keep telling myself that because it feels much later in the week. Yeah, there's a great deal of confusing news going on out here. It's difficult to make sense of, and I think a lot of it has to do with, say, governments trying to be extremely cautious, and to a degree, drug makers as well. And yet, I think that there is a certain amount of confidence about, the effectiveness of vaccines, and it remains to be seen for the effectiveness of drugs as well. it's difficult to put this in all of it in context because there is news coming in from so many different directions. But so far, what the drug makers are saying, at least most of them, is that they think that their vaccines will be at least somewhat effective against Omicron.
What does somewhat mean, though? And in the context of,
I don't think we really know, but
yeah.
the thing is, the vaccines so far have been 96% effective. So that's a really effective vaccine. You know, you think about it, that's much more effective than the flu vaccine, right? Flu vaccines, sometimes they tend to go between 30 and 50% effective in a given year. So they're still, they seem very effective at keeping people out of the hospital. We don't know. I think the Moderna comments earlier may have thrown a bit of a scare into people because they said they thought it would be less effective and we would need a new vaccine. But that's not what the other drug makers are saying. And then the other thing that, countervailing that is that in the places where Omicron cases have been seen, they seem to be less severe. And this is news that's come out of both the EU and South Africa, both of which have excellent surveillance and excellent healthcare systems. Now, does that mean that these are breakthrough cases in people who have already been vaccinated, and so that's why they weren't severe? Or does it actually mean that it's a less severe virus? It's very difficult to say. Or was it just the population that was seen in? Was it younger people, children, people who usually don't develop severe cases? So there's a lot of data. I mean, it's not to say we'll never find the answer to these questions. I think we will at some point. But what have we known about, Omicron, I think it entered the vocabulary about 5 days ago, right?
Yeah.
So there's still a lot to find out about this. And the other thing to remember is, here in the U.S., we still haven't seen Omicron. We will. There's no doubt that we will. But
is that, John, because we don't do the same kind of sequencing that other countries do?
We did a story yesterday in which we sort of laid out, some of the issues around the surveillance system here in the U.S. And we do a lot of sequencing. There's no question we do a lot. But the intensity of it, the percentage of cases that are tested and sequenced is lower than, say, in some countries like the UK, for example, which is the star. They are the world leader in this, and which we probably ought to be trying to catch up to. And actually, South Africa does a very good job with this stuff as well. South Africa, huge health problems and have to keep an eye on stuff like HIV, which has huge rates of. So they're very good with sequencing there. And that's, there's every reason that's why they found Omicron there, is because they're actually keeping such close eye on issues like this. So you have these things going on, and it's
John,
time, we have to go.
Yeah, I'm so sorry. But I know we'll be talking to you again because it does feel like every day we're trying to make some sense out of, especially in the last couple of days. John Lauerman, thank you so much. Health team editor, Bloomberg News on the phone from Boston.
Well, let's head from Boston to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Thanks, Tim. The Treasury Secretary is sounding alarms about the U.S. debt limit. During a Senate hearing, Janet Yellen said the U.S. will default on debt obligations if the debt limit is not raised or extended by December 15th.
There would be scenarios in which Treasury would not have sufficient funds to continue to finance the operations of the U.S. government beyond that date.
Yellen says a default on the U.S. debt could eviscerate the ongoing economic recovery. Senate Republican leader Mitch McConnell says the U.S. will not default on its obligations, and he's in talks with Majority Leader Chuck Schumer on a path forward. President Joe Biden is in Minnesota this afternoon to highlight the infrastructure law he signed 2 weeks ago. The roughly $1 trillion package is focused on improving roads and bridges and public transportation. The other signature proposal in Biden's agenda is the Build Back Better plan, which appears stalled in the Senate. Even if it passes this year, it'll take years to set up some of the most popular provisions.
One of the president's biggest promises is that his agenda would cut child care expenses nearly in half. But the official who oversaw federal child care programs under the Obama administration tells Bloomberg even if Build Back Better passes this year, it could take up to 4 months for the federal government to issue guidance. Then there are state budgets to consider. The official says it could take some states up to 2 years just to figure out how to pay child care workers a living wage, when some of them make less than retail and warehouse employees right now. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week on this Tuesday. Carol Master, Tim Stanovic here. This is your most read story on the Bloomberg in the past 60 minutes.
This comes from our own Sri Natarajan. Goldman Sachs CEO warns that New York City must, quote, keep itself attractive to workers.
Yeah, it's interesting. We're talking about Chief Executive Officer David Solomon telling the city's leadership to be mindful of the business environment or risk more companies sending workers elsewhere. Here's his direct quote. He said the comments, they were released today from a Financial Times conference. New York has to be aware that there are good choices and it's got to keep itself attractive. Incentives matter, taxes matter, cost of living matters.
New York City, of course, was the epicenter of the COVID-19 outbreak in the U.S. back in 2020. That resulted in an extended shutdown. It persuaded some of the city's wealthiest residents to decamp to other destinations. Now, more recently, there's been a push to raise taxes on the rich. That's been a source of consternation for those whose incomes get a boost off the city standing as a premier global financial hub. Carol, I think back to, as we get to the end of the year here, the conversations that have really dominated in the early part of the year, the idea of firms moving to other places, including Florida. And
they are.
And they are. But there are still a lot of firms that are based here in New York City.
Right.
And these firms want to make sure that New York City is not only attractive for them to remain, but also for their workers to remain.
Right, exactly. And they're thinking about that. Solomon did go on to say that New York City is in no danger of dying off. He did say it can't take its standing, though, for granted, pointing to a decline of Detroit in the last 50 years. I would find it hard to make the comparison between Detroit and New York City.
Why?
I don't think it's apples to apples. New York City, there's a lot of different industries that kind of keep this city going. There's obviously finance, there's tourism, there's trade. You have a big tech sector.
Growing tech, private equity,
academia,
venture capital, academia.
There's a lot, and then you just have a lot around it. So I think it's different.
Fashion.
Detroit was so
was
reliant
one
on
industry town.
the auto industry, right?
Yeah, that's a really good point. But this has repercussions, right? It has public transit repercussions. It has repercussions for infrastructure and more.
Right, and everybody's always worried about the tax base, which is needed, a big one to support it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletta. Down Tuesday, the Dow, the S&P, Nasdaq all slumping after Fed Chair Jay Powell weighed an earlier end of bond tapering, with traders boosting their bets on the pace of interest rate increases. Powell also told a Senate Banking Committee this morning that it is time to stop using the word transitory to describe inflation. His remarks were broadcast live here on Bloomberg Radio. The S&P down 70 now, lower by 1.5%. At the worst level of the morning, have been down 1.9%. The Dow now down 551, down 1.6%. Nasdaq down 227, down 1.4%. 10-year up 18.30 seconds. 10-year yield 1.43%. Spot gold down $9 the ounce at $17.75, down 0.5%. A lot of movement today in energy. Crude down 5%, 66.42 for a barrel of West Texas Intermediate crude. Natural gas down 5.5%, 4.58 now per million BTUs. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So call it storage wars on steroids to some extent. Supply chain carnage creating opportunities for companies that are willing to take a chance on some random goods, Tim.
What's it going to be? Is it going to be a car? Is it going to be pumpkin seeds? Maybe some rotting fruit?
A little bit of both.
It could be all of the above. It is a fantastic story. Joel Weber is editor at Bloomberg Business Week. He's with us in the Bloomberg Interactive Brokers studio. Jeff Wise is freelance contributor for Bloomberg Business Week. He joins us on the phone from Westchester, New York. So, Joel, how is this an industry?
Oh, man, this story brought me so much joy. It was like, we just keep getting horror messages about the supply chain and how everything's broken. And then, you get a little gem like this that reveals that there are people whose specialty is to deal with boxes that are sort of mystery boxes. You know, it's like the little mystery
Not
bags
just
at
any
the fair.
boxes, though, right?
Exactly, like container boxes. And it turns out this is an industry in and of itself that we probably wouldn't write about if there wasn't some supply chain carnage. So, Jeff, tell us about how you found out about this amazing story.
Well, I was doing a story about the Ever Given, and one of the aspects of the story that was kind of drew my attention was the fact that nobody really knew what was on that ship. You know, there were something like 20,000 containers, and there were various reports. Like it had been reported that there was a life-size Tyrannosaurus Rex that was heading for a mini golf course in England. But like nice little details like that. But nobody really knew what the bulk of it was. And there was this young guy in the UK who was more talkative than most of these salvage buyers, and he kind of became like sort of an instant media star over in the UK. He was on the local news and everything, talking about what he had taken about 20 containers off the ship and was trying to figure out what to do with it. He had actually 10 containers, I think like 200 tons or something, of raw cabbage that had been picked by farmers in China, put in these containers, and was destined for Europe. And then, of course, it was stuck for 4 months in the heat.
Inadvertently.
And it had liquefied. It had turned into goop. And so this is a guy who, became the centerpiece of my article for Business Week. He can both turn around stuff that has some value left in it, or he can take stuff that's absolutely toxic or dangerous or whatever. It has to be disposed of. So he whatever it is, he kind of uses his cleverness and his connections to find out the best thing to do with it.
And how is it that in 2021 that these could be mystery boxes? Isn't it? Don't the companies that transport these containers know exactly what's in every container?
For the most part, yes. Each container has a manifest, and it's sealed, and so there's not supposed to be any tampering. But there's shenanigans that go on, and sometimes the manifest is vague. In the case of the one that I wrote about in the story, it just said household goods bracket car. And they're like, what that meant was anybody's guess. Like, what value do you assign to that? It's like a complete, random guess. But he was telling me sometimes, this wasn't in the article, but there's a trade where people basically, because it costs money to dispose of stuff, especially dangerous stuff. So what they'll sometimes do is they'll bundle up, correctly, say, plastic recycling in the front of a container, and then behind that, it's like either just junk or garbage or something hazardous. And then you ship it, to Asia or to Africa, and then it's effectively you're disposing of it. The same day I was there, he showed me the car. He had a load of tires that had been illegally shipped off and had been sent back, and so he was going to dispose of that.
So I understand why someone might not claim 20 containers full of what was formerly known as cabbage. Right. But why would something like that car not get claimed? Like how frequently does stuff just not get claimed at the port?
He is not a detective. His job is just to figure out what to do with this stuff, and the quicker he can do it, the better. So yeah, my instinct is the same as yours. I'm like, how do you? But that's not his approach. So he doesn't know. Like he has no idea what happened. This guy could have died. He could have just looked at the storage charges and been, I don't want to deal with this anymore. But this is a real problem. The containers sit there, and whatever's in it is not gaining any value, and the costs are mounting. I actually wound up, I was over in the UK doing a couple of stories, and I wound up sharing a cab with a woman whose son was in the furniture importation business, and she was telling me he might go bankrupt because there's such a shortage of truck drivers. Because of Brexit, all their truck drivers left, and they have a real problem. They just can't move stuff. And the longer it sits, the worse the problem gets.
So I just have this image of him rubbing his hands together and ooh, supply chain problems, all those containers, sitting out there. Is he just, kind of expecting kind of a windfall?
Well, it's been good, but there's plenty for him to do anyway. This is, what's so interesting about this story is that, containers are kind of routinized. You're basically taking what used to be every item was individually, put on board a ship by stevedores, and everything has been kind of routinized into these identical boxes and moved by the tens of thousands through these ports. And we are all around the world part of the system that is brought together. And here you have these guys who are kind of breaking that mold, and they're sort of taking things back to the idiosyncrasy that's kind of inherent in all these little transactions that are packaged onto these boxes. Which doesn't answer your question at all, I grant you. But,
okay, that's all right. It's still interesting.
But I guess another way of asking it is the problem getting worse?
Yeah.
Well, the problem is bad there. It's we have a slightly different problem here. We don't have Brexit, and we weren't quite as affected by the blockage of the Suez Canal, which had these sort of ripple knock-on effects over in Europe, but not so much here. But we do have the kind of COVID backlog. The president had a press conference last week where he specifically addressed this. And the people that I talked to, everyone has kind of a different sense of how long this is going to look, but it was anything from 8 months to 2 years this is going to be with us.
Yeah, I just think a guy like this, it's just it seems like this would be like Christmas every month,
unless you're getting
and it's like I have a 6-year-old. It's like anything that's wrapped up is like a big surprise, and this is like Christmas every day.
Even
of the
rotten
year.
cabbage.
They're very counter-cyclical, right? When things are going bad for everyone else, it's good for them, right? The more stuff, every time things rot or go awry, these guys are here to pick up the slack. But I think there's, even when things are quote unquote normal, things always go awry.
I'll pass on the cabbage and say yes to the sedan.
Even though it's a 2014.
It's so what? So what? I probably could sell it more now than I could have in 2014.
There's no title with it. Yeah. There's no title with
Who
it,
needs
Joel.
chips? Yeah,
Supply demand.
6-year-old car.
You'll sell that car quickly. All right, Jeff Wise, this is a great read. Freelance contributor to Bloomberg Business Week in the upcoming issue of the magazine. Joel Weber, editor of Bloomberg Business Week, in our interactive broker studio. Pumpkin seeds. Cabbage.
Hopefully not rotted.
No, I know. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
trends, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, November 30th, final trading day of the month. We've got the Dow, the S&P, Nasdaq all declining after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their wagers on the pace of interest rate increases. 10-year yield right now, 1.43%, 10-year up 17.30 seconds. Stocks lower across the board, with the Dow down 591, down 1.7%. S&P 500 index down 76, a drop now of 1.6%. Nasdaq down 233, down 1.5%. Powell also told a Senate banking committee it is time to stop using the word transitory to describe inflation. And in remarks carried live here on Bloomberg Radio, he discussed Omicron and what it means for the overall outlook.
The recent rise in COVID-19 cases and the emergence of the Omicron variant pose downside risks to the employment and economic activity and increased uncertainty for inflation. Greater concerns about the virus could reduce people's willingness to work in person, which would slow progress in the labor market and intensify supply chain disruptions.
BioNTech CEO says the current generation of COVID-19 vaccines probably will still protect against severe disease in people infected by the Omicron variant. BioNTech is Pfizer's partner on the COVID vaccine. BioNTech's ADR is down now by 2.6%. David Marcus, one of the top executives at Meta Platforms, Inc., and the co-creator of the yet-to-be-launched Diem digital currency, is leaving the company after 7 years to pursue other projects. Shares of Meta, previously known as Facebook, down now by 3.2%. AT&T stock falling to a 12-year low after the company's CEO of communications told investors he expects customer growth to slow. AT&T down 4.3%. And that's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Bloomberg Business Week is brought to you by SEI. Crises emphasize character and partnership. One mission, one community. SEI. Go to SEIC.com/IMS.
All right, let's get to today's Bloomberg Big Take. It's also most read on the Bloomberg today. It's about the crypto vigilantes that are weeding out, hunting down the fraudsters in a fast-moving corner of the crypto world, Tim.
Sophie Alexander is one of the reporters on the story, along with Ms. Elena Igafopoulou. Sophie joins us now. She's a reporter at Bloomberg News, and she joins us on the phone from New York City. Sophie, it's great to have you, and this is just a great read. I encourage everyone to check it out at Bloomberg.com. You profile Robert Browning and a group called the Rug Seekers. Why are they called the Rug Seekers?
They're named the Rug Seekers for a popular scam called the rug pull, which is basically the pump and dump of the crypto world today. It's where, the creators of the coin pump the coin up, get everyone to invest in it, and then pull all their money out, and so the coin crashes dramatically.
Tell us about what they are finding and what it kind of reveals about the crypto market.
Sure. So they operate in the DeFi space, the decentralized finance space, which is this Wild West corner of the crypto world where there's not any regulation at all. And so there are some places that investors can turn to sort of suss out whether an investment is safe. And these are mostly just scanners looking to see if there are any, red flags in the code. But what the Rug Seekers do differently is there's a human element to it. They go to where these groups meet. They go to where they can actually talk to the creators of the coin to try to get a better sense of whether they're trying to scam them. They'll ask them questions. And what they're finding is, there are a lot of scams out there. And it's pretty easy to tell when someone is, is going to take investors' money. It's just a matter of asking.
Okay, so what are those questions that these Rug Seekers are asking? And what are those questions that our audience, that investors need to be asking when they're learning about these different cryptos?
Yeah, so I mean, to a layman, which I practically was before working on this story with Missy, who's more of the expert here, these terms sound foreign. For example, doxing. Doxing is a term which means whether or not your information is public. That's sort of more better known in like the context of people are being doxed on Twitter, which is revealing all your information. But when when a creator of a coin is doxed, that coin is typically safer because there's more accountability there. You know who created this coin. You can, their first name, their last name, their story. You can look up whether they've, ran rug pulls or honeypots and other form of scams before. And if that's the case, then yeah, you probably want to avoid that scam. But there are a bunch of other things like, like the liquidity pool that they're checking out, and like the ratios of the liquidity pool and how much money is in the coin. And if the liquidity pool goes to zero, then people can't trade the coin anymore, which means, that everyone who's invested money in it is sort of out of luck.
Wild, wild west. Are regulators like checking out what these guys are up to understand more broadly the crypto world?
It's definitely on their radar, but there's nothing really being done yet beyond general warnings like watch out, be careful in this space. But as of right now, it's too small for them to get their hands on. It's very early in this world, and regulators, they can't do it all. They can't possibly keep up with it at this point.
I guess the question would be about what motivates these rug seekers, because they're kind of taking it upon themselves to go after people who they don't know, to, in some sense, protect people who were could have been affected like the way that they were affected in rug pulling.
Mm-hmm. Yeah, so Browning, he was actually the victim of a scam back in July, or a seeming scam. It's hard to tell sometimes because there are also these things called bots in the crypto space, which people can buy, and they'll basically go in, pump up the coin, and then pull it all out, similar to a rug pull. But he was the victim of a scam. He invested $8,000 into a coin called Altex back in July. And he, not only that, but he recruited a bunch of his friends to join him and invest their own money as well. Eric Mings is one of them. He's also in the story and is also now one of these people helping find scammers. But they really talk about their own personal experience as being a main motivator for doing the work that they're doing today. It's just devastating, not only to lose your own money, but to have brought in other investors as well.
Well, how quickly, though, do they somehow block the rug seekers or squeeze them out so that they can kind of continue, these fraudsters, on their merry way?
Yeah, that's an interesting point. We watched it all happen live when Missy and I went to Indiana back in October. We were down in their basement, and they were checking out a coin that they got a tip about. And a lot of this happens in Telegram, which is a messaging app. And so they go into the Telegram group for the coin, which in this case was called We Save Moon. And
not to be confused with Safe Moon, right?
Of course, yes, that's right.
Which is a different coin.
Moon. A different coin, but a similar reference. We're talking about going to the moon in crypto speak, which is, getting really, really rich and the price skyrocketing. But with this coin, they started asking questions, and as soon as it sort of got even a little bit testy, they were blocked from the group. And when someone is blocked from the group, all of their messages disappear also. Mm-hmm. So any investor joining in the chat afterwards couldn't have seen potential warnings.
And it all happened so quickly. I mean, this is what cool. And it's really wonderful to read this online because of the way it's done. It's very interactive, but you feel like you're in the moment and stuff. It's nuts.
It's totally nuts. And I wonder, I guess, Sophie, just in the last 20 seconds we have with you, how does this end? I mean, is this the type of thing that regulators get involved with and make it illegal? It just seems like it's happening in a decentralized way.
Yeah, it absolutely is. I mean, that's the whole point of this space, is that it's decentralized, so it's hard to hold any one person accountable. But eventually, I mean, regulators are going to have to start doing something. It's just a matter of time, and hopefully it'll be soon.
All right, here we go. What are they called? Rug seekers.
Rug seekers. I really feel for the victims here.
Yeah, I do too. And you realize how easy it is for people to get caught up in this. I mean, this is why we're trying to figure out this crypto world, right? Because there's a lot of risk within it, safe to say, but we've got the stories of people who have done like really well. Hey, Sophie Alexander, reporter at Bloomberg News. Thank you, on the phone in New York City.
Well, let's head from New York to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. A panel of federal judges is considering former President Trump's claim of executive privilege concerning documents being held at the National Archives related to the Capitol riot. President Biden says he's fine with releasing the documents. During arguments today, Judge Ketanji Brown Jackson seemed to criticize Trump's attorney for his broad claims for keeping the information confidential.
You do have many places where you suggest at least, that even if this president cannot express privilege or whatnot, the court should still enjoin the archivist because the legislature has acted inappropriately in this case.
Earlier this month, another U.S. district judge emphatically endorsed release of the documents, saying, quote, presidents are not kings and the plaintiff in this case is no longer president, thereby eliminating his claim of executive privilege. Also relating to the Capitol riot, former President Trump's last chief of staff, Mark Meadows, has agreed to sit for closed-door questioning by the House panel investigating the insurrection. The panel's chair says Meadows has also turned over some records and engaged with the lawmakers through his attorney. One supply shortage that's impacting the holiday season is the fact there are fewer Santas this year. Jim Fletcher runs Lone Star Santas in Texas and says the demand is higher than usual.
We've got a lot of people that haven't been around Santa for going on 2 years now.
Jim Fletcher says it also hasn't helped that they lost some of the older Santas during the pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic. We're here at Bloomberg headquarters in New York City in our Interactive Brokers studio. A couple of stories from the tech world. David Marcus, one of the top executives at Meta Platforms, formerly known as Facebook, and the co-creator of the yet-to-be-launched Diem?
Yeah, Diem.
Okay, Diem digital currency, leaving the company after 7 years to pursue other projects. See ya.
He might be a familiar name to those people who followed Facebook closely. He came over from PayPal in 2014, and the idea was for him to run Messenger. This was when Facebook Messenger wasn't a separate app, and they wanted to build Messenger into this super app like WeChat or like one of the Chinese apps where you can do everything. And he ultimately, I think it's fair to say, he succeeded in separating it out from Facebook's platform. So if you wanted Messenger, you had to download Messenger separate from Facebook. But then he went off to help with the company's cryptocurrency endeavors in the blockchain division in 2018.
And it's been difficult.
Yes.
Getting it off the ground, a bit of a struggle for Meta and Marcus as well. Since the project was unveiled back in 2019, we're talking about Diem. Great fanfare, lots of partners. The currency's debut has been delayed and its original ambitions scaled back. Diem faced pushback from lawmakers and regulators when it was announced. And while Meta is still a partner in the effort, Diem is now run independently. So, it's kind of indicative of the environment that we're in. And especially being a big tech company, social media company that has been on certainly lawmakers' radar for some time.
Yeah, I was going to use the term crosshairs
that works too.
in regulators in the United States and around the world, indeed, as well.
Yeah, so that's kind of interesting. So that's going on. And then we have Nasdaq partnering with Amazon to shift its North American exchanges to the cloud starting in 2022. It's the latest among exchanges that have started expanding into cloud-based software and data analytics. Earlier this month, Alphabet's Google struck a deal with the CME Group to help the derivatives exchange operator move its data and clearing services to Google Cloud, then eventually trading in other markets. So, we're all just living in the cloud. We're living in Meta and we're living in the cloud.
Yeah, do you need the cloud for the metaverse?
Can you jump from the cloud to the metaverse?
It's true.
I don't know. We're still figuring this one out. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell with the Dow, the S&P, Nasdaq, all very much on the minus side. In fact, we are close to session lows. Let's head right over to the First Word breaking news desk for today's afternoon call. Here is Bailey Lipschultz.
And good afternoon, Charlie. As you said, stocks are trading lower after Fed Chair Powell weighed an earlier end to bond tapering. The Dow is down 620 points, S&P drops 80, and the Nasdaq is down 240 points. The U.S. 10-year yield is at 1.44%, small caps are lower by 2%, and crude falls 5% to trade below $67 a barrel. All 11 main S&P sectors are trading lower, led by losses in communications and materials. Nasdaq biotechs fall 30 points, transports sink 3%, semis drop 65 points, while the VIX is higher by nearly 20%. In the Dow, only Apple and Nike are trading higher, while Salesforce, American Express, and Dow are the worst performers. Regarding vaccine stocks, Moderna fell after its CEO said current shots are less likely to be effective against the Omicron variant, while Pfizer is poised for its best month in 30 years. In the telecom space, AT&T dragged peers lower after management warned of slower wireless growth. And wrapping things up, look for earnings from Salesforce, Allbirds, and Zscaler after the bell. Live from the First Word breaking news desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey. And to hear live breaking news over your Bloomberg-type Squawk-S, QUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie. Thanks. Charlie Pellet with that Bloomberg Business News Flash. Well, among our most read stories on the Bloomberg, this one is about a secretive robot that is helping one investment firm locate winners. Robots in finance, they're not new, Tim, but this is something different.
Yeah, this is not just about picking the winners, but it's about avoiding picking the losers.
Right. It's the same thing with investing, right? It's not only about gaining money, but it's about making sure you don't lose a lot of money.
It is, but there's also a big human element involved. Unfortunately, we have Edward Hammond, deals reporter for Bloomberg News. A human, not yet
last time we checked.
A robot. Although, yeah, he gets scoops like some sort of superhero. Ed Hammond, great to have you with us this afternoon. Tell us about this robot that Stripes is using and has been using.
Great to be with you guys. Look, I think the first thing to say is, yes, the robot is secretive, but only because Stripes itself is secretive. It's a very, very private equity firm. And by that, I mean they have never done a press release. They've never done an interview. They don't really go out and make any noise about what they're doing.
You know what, Ed? You know what's so funny?
I've never heard of that.
You know what's so funny, Ed? On our call this morning, on our call when we were talking about doing this story, I said, "What is Stripes? Should I have heard of this company?
We all felt really stupid.
Yeah.
No, but you shouldn't, because that was where I was. I became interested in them because some of their portfolio companies were going public and were having these insane IPOs and becoming quite well-known brands. And I was like, well, who's this company that keeps showing up again and again and again on the shareholder base? And no one seems to know anything about. And then looking into them, even with the might of Bloomberg and all of our data, I was like, we don't show a huge amount about them. This has got to be an interesting story. And so I dug in and eventually started to piece together this thing that they have, which I think is fairly unique in private equity, which is that they're using, what has been a long-term trend in hedge funds, sort of algorithmic trading. They're using that same kind of technology to actually source deals. And then they're using humans to go and build relationships to get into those deals and then help manage those companies through their growth from early stage right the way through IPOs. And it's something that has obviously worked extraordinarily well for them, at least thus far.
Well, and it sounds like the more data, sonar, right, it's known internally, but the more data it accumulates, the smarter it seems to get, and that's helping it avoid losses, right?
Right, exactly. So, and this was a key point of the story. It was like, yes, it has these great return numbers and, long-term IRR that is way above what would be considered normal in the industry. But actually, the more interesting part to me was that, like, over a period of time, its loss ratio has gone to sub 1%,
right?
Which is almost unheard of in investment. I mean, really, what that means is that, like, if you pick 20 investments in a fund, you're you're losing money on almost none of them. I mean, it's just a remarkable thing to do. And obviously the robot is a big part of that because it's able to refine the companies that it puts in front of the investment professionals at Stripes. And so you have what seems like a very, very good and consistent investment model for them. The key thing that they said to me when I was sort of digging into this, and they weren't cooperating with me on this piece, but they did say, look, the technology is only useful for our firm. It wouldn't be something that anyone else could just plug in and go. And I think what that means is that the kind of investments the robot picks are ones that actually make sense for the investors at Stripes and for their professional expertise. It wouldn't necessarily work at any investment firm.
Ed, what is the data that they're able that Stripes is actually and the Sonar robot is actually able to dig into? Because these are private companies, so this type of data isn't readily available. So what does it look at? What are the inputs?
Yeah, it's a great question. I obviously was not able to establish exactly what it looks at because that would be sort of giving away their secret source. But it takes from a very wide range of different data groups and fact sets, and some of that is news articles like we write on private companies. A lot of it is stuff like customer satisfaction surveys, credit card scans, and sort of more granular stuff. The interesting thing is how it scores. From what I understand, it has a scoring mechanism that sort of puts a tiny, tiny proportion of the companies it looks at in the sort of the box that says to the Stripes investors, this is a top scorer for us.
What are they invested in?
Cookies.
Cookies. That's right. They're in Levian Bakery.
Did you get to eat any of those, Ed, for your reporting?
That's something I haven't done yet.
Okay, you and me, we're going.
On my list. I'm up for it.
3rd Avenue, Upper East Side.
I might even order some for the office.
You should.
I'm in studio. But they're in Cookies. They are in Parade, which is this like fast up and coming underwear group. They're in On Running. They're in Monday. They are in Remitly, which is a cash transfer app. They're in a lot of different companies and a lot of very successful companies, and 4 of which went public over the summer and have had, as I say, sort of like rapid growth, even post-IPO, although that may have cooled off slightly today, but along with everything else.
But it's interesting when we know that there's a lot of money chasing, especially a lot of younger companies. It does sound like that this is giving them a big advantage, both on the upside, but in particular on the downside as well. Ed Hammond, thank you so much. Bloomberg News deals reporter Ed Hammond on the phone in New York City. I love this story.
I love Levain Cookies.
Okay.
I didn't know that they had private equity investment.
But you just think about it, right?
Yeah.
And ultimately, these companies go public. If you get in early enough, you think about the potential for rewards. You need the robot. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
He's pumping us up, man.
He certainly is. That man, of course, is none other than Dave Wilson.
Do you know he's only got another day left with us?
That's 2 more songs of the day.
Yep, 2 more songs of the day.
For people who don't know, Dave Wilson.
Retiring after how many years, Dave?
31.
31 years.
Wow. Not yet, though.
You don't want to make it an even, like, 35?
Well, if you throw in my career at Dow Jones, it's almost 40.
All right.
All right, we'll count it this time,
He's
Dave.
always got a response for us. All right, let's get back to Charlie Pellet with a check on that trading day. Hey, Charlie.
Well, hello there. My bet for Song of the Day tomorrow, Never Can Say Goodbye. That would be my guess right now, but what do I know? What do I know? Here's what's going on. The Dow, the S&P, Nasdaq, all declining right now. Stocks are slumping after Fed Chair Jay Powell weighs an earlier end to bond tapering. Traders boosting their wagers on the pace of interest rate increases. Those bets pushing the Treasury curve to its flattest since the onset of the pandemic, with the premium of the 30-year rate over the 5-year tumbling. Powell, by the way, also told a Senate Banking Committee, heard him live on Bloomberg Radio, that it is time to stop using the word transitory to describe inflation. Right to the numbers. S&P close to session lows, down 79, drop right now of 1.7%. Worst level have been down 1.9%. The Dow down 588, down 1.6%. Nasdaq down 244, down 1.5%. 10-year up 19.30 seconds. 10-year yield right now 1.43%. Gold down $11 the ounce right now. It is down by about 0.6%, 17.73. And crude West Texas Intermediate down 4.5%, 66.81. Drug makers are rushing to test their therapeutics against the Omicron variant first found in South Africa amid signs it could spread more quickly and evade protection due to the high number of mutations it displays. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
What we're hearing from South Africa is that these tend to be mild illnesses, but they're occurring in younger people who tend to have mild illnesses to begin with, so you can't really take that at face value. We're also hearing that the hospitalized individuals tend to not be vaccinated, which makes sense. I just need to get a little bit more of a denominator there to see exactly how common that is, but I don't suspect this is more virulent, and I suspect that the vaccine does what it's supposed to do when it comes to severe disease, just like it did with the Beta and Gamma variant.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track on a regular basis. Pfizer up today by 2.7%. Its German partner BioNTech, the ADR is down 2.5%. AstraZeneca's ADR is down 0.7. Moderna out of Cambridge, Massachusetts, down 5.4%. J&J lower now by 1.9%. Among some of the names reporting after the bell today: NetApp, Hewlett-Packard Enterprise, Salesforce, and Zscaler. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. This is Bloomberg.
Walking wounded pass by, sneaky peek through their windows.
Okay.
Not going to get it.
We're not going to get it.
What is the secret?
I will tell you, you know the performer, but not as a
Boys are up
performer.
and gone. You can still see past through the lawn, made by children. After
I know the performer. Old?
Older.
Older.
Well, this was a single album from 1992.
Is this Tom Keene?
It is.
You got it. Wow.
Wait a minute. Holy moly.
It's an album he did.
He always talks about, like, the album, right?
Absolutely. And I have a copy of it. It's called Searching for Ward in June. This is the title track. You can still buy the album.
Really?
From an outfit called Melville Park Studios. Evidently, that's where he recorded it. Yeah.
What's it called? Searching for?
Ward and June. Like, they are the parents of Beaver from Leave It to Beaver.
Right.
Right? That's what we're talking about here.
Obviously.
That is adorable.
If you go to melvillepark.com,
okay,
in the What's News section, you can find there are 3 albums, maybe 4, that they sell, and one of them is Searching for Ward and June.
You know what? And you get just a great picture of Tom Keene if you look at this listed on Amazon as well.
Absolutely. $15 from Melville Park plus $2 for shipping and handling, which has absolutely nothing to do with the chart, but everything to do with Bloomberg surveillance.
Aren't you a gem for doing that?
Ah, you know, it's the little things.
You know.
In any
It's
case.
very sweet. Yeah.
If you were a Twitter shareholder, you'd probably appreciate somebody who would do something like that for you because you didn't get much from Jack Dorsey over the last 6+ years. You know, we know yesterday he stepped down as CEO at Twitter, deciding, among other things, to focus on Square. And so what the chart does, it looks back to June 2015 when Dorsey took the helm at Twitter and compares its performance up 31% in the last 6.5 years with the NYSE's FANG index, which rose more than 6-fold during the same period, and Square, which at one point was up 30-fold.
Wow.
I mean, you talk about an underperformer.
Yep.
I mean, you got to hope that their new CEO delivers more for shareholders than Dorsey was able to do after all those years. So, you know, it gives you a sense of what the challenge is ahead as well for this company. And, you know, it does kind of really provide a study in contrast when it comes to performance.
Hello, Square.
Yeah.
Yeah.
Wow.
Yeah, which actually went public a couple of months after Dorsey took over Twitter, so you get the whole history of this company. And yeah, I mean, it really started taking off last year. It's been kind of up and down this year nonetheless. I mean, the extreme that we saw in 2020, I'm just checking here, the shares were up almost 250%. And they've more or less managed to hang on to that gain at least.
Well, it's something to think about, right? And maybe helps explain a little bit of what's going on. All right, chart of the day, stock of the day. I have to say I'm obsessed. Sorry, I'm a little distracted. I'm on Amazon looking at the picture of Tom Keene.
I told you, it's a great picture, right?
He's got a great profile. I'm sorry, Dave, go ahead. Stock of the day.
All right. It's a company.
You started it, so.
Yeah, I know. I'm not complaining. You know, it's a company called StoneX, and the ticker there is SNEX. It's a commodities and securities brokerage, and came out with fiscal third quarter results, actually fourth quarter, I should say. It's not quite clear from our coverage as I check this out. Indeed, we are talking about the fiscal fourth quarter, which ended in September. You know, they're looking for a 15% return on equity as a target. They only delivered 3.2% in the quarter, so the numbers did not live up to what analysts were looking for to the extent they were. There isn't a whole lot of coverage on this company, but I will tell you, the shares are headed for their biggest drop since December 2008. They're down about 16.5%.
Got a favorite stock of the day?
Oh, Lord.
Favorite
I can't remember them all.
All right. We'll talk more about this tomorrow. You have a good evening. Dave Wilson.
Carol's ordered that CD already.
I don't know about that. I love you, Tom, but I don't know. I do love Nancy Lyons, though.
Yeah, well, Nancy didn't even name. She couldn't even name the song, Nance.
You have to check out this picture.
I would not have gotten that one. Sorry. Anyway, Treasury Secretary Janet Yellen and Federal Reserve Chairman Jay Powell have given their latest assessments of the economy to the Senate Banking Committee. Bloomberg's Irv Chapman has more from Washington.
Powell spoke of the recent increase in inflation.
Generally, the higher prices we're seeing are related to the supply and demand imbalances that can be traced directly back to the pandemic and the reopening of the economy. But it's also the case that price increases have spread much more broadly across the economy, and I think the risk of higher inflation has increased.
Powell said inflation has not necessarily made a permanent mark on the economy, but if it does, the Federal Reserve will use its tools to ensure that it does not become entrenched. In Washington, Irv Chapman, Bloomberg Radio.
Russian President Vladimir Putin is warning the West to not expand Western military infrastructure into Ukraine. He says Russia would need to respond to any such threats, which he calls a red line. U.S. Secretary of State Antony Blinken says Putin's comments come as Russia builds up forces along the Ukrainian border.
We have seen Russia's playbook many times over. Part of that playbook is to attempt to create and manufacture a so-called provocation as justification for something that Russia is planning to do all along. And so whether what's been reported fits into that playbook, I don't know.
Blinken spoke in a NATO meeting of foreign ministers underway in Latvia. A 15-year-old is in custody, suspected in a school shooting today in the Detroit suburb of Oxford Township. Authorities say 3 students are dead, 6 other people are injured, including a teacher. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
You've lost me for the rest of the day.
You're just looking at, we got to get Tom. We got to get this. You know what we need? We need the story from Tom Keene.
Well, I've heard it. Like, he's talked about this on air. And I know he plays guitar. I knew he had an album.
Did you know he had a voice like that?
I don't know that I've ever heard and I don't know that I had seen the album cover. It's part of the Bloomberg lore. Tom Keene singing. Anyway, I'll move on from this because I do want to bring you a story by Matt Bosler, Joe Doe, and Katya Dmitrieva, who puts out on the Bloomberg, fattest profit since 1950, debunked the wage inflation story of CEOs. I do find this interesting. Companies talking about, higher prices, supply chain problems, and yet they're churning out the profits.
I mean, you called this earlier this year. You've talked about this a lot, Carol, that companies always find a way, and they certainly did this year.
Mm-hmm.
In the second year of a pandemic that began by wiping out 20 million jobs, American workers are doing surprisingly well. It's just that American businesses, well, they're doing even better.
Check it out. In the past 2 quarters, U.S. corporations outside of the finance industry posted their fattest margins since 1950. One reason why stock markets keep hitting all-time highs. We know this. You can do a lot of things with bottom line and, massaging earnings, if you will. Revenues, you can't play around with. And margins, if you can show margin growth, that's significant.
Investors certainly like that.
Means you're more profitable, right?
Exactly.
Yeah.
And earnings calls, plenty of executives complained about the squeeze from rising costs of labor as well as materials, but overall profits were up 37% from a year earlier. That's according to data that was out last week from the Commerce Department.
And we know businesses are paying out more cash to their employees. Total compensation up 12% in the last quarter from a year early, partly because millions of Americans went back to work. Also, though, because many got a raise when they did so. Hourly earnings broadly kept up with the fast rising cost of living, and in some low-paying industries like leisure and hospitality, they comfortably outpaced it.
So is one of the takeaways, perhaps, Carol, that companies can absorb the higher costs of inputs and, in fact, afford to pay workers more to retain and attract them?
It looks like it.
It does.
Can it continue? I guess we'll have to wait and see when we get into the next round of earnings, and especially if the supply chain constraints continue. Anyway, great read.
Okay, traders, hello again. I'm going to place a order to sell short Bitcoin. If you're looking to trade Bitcoin, here is your chance. 57,758. This is the price. I'm looking to sell Bitcoin. Okay, 57,758. Okay, I will adjust for you. So if you look into trade, stay with me. If you place an order and we will go through until the end of the trade, we will make a profit. It's 57,758. Okay, hopefully we'll get filled. Okay, for people who want to get the strategy, who are just new guys, you need to go to company.co.uk and you need to get this strategy. For other people, if you already have our customers, our clients, please follow our trades, follow my trades, and start making profit. Also, we run a webinar. You can register for webinar on Saturday. I think it will be 4th of December. So you're welcome. Place is still available. So you're welcome to register. First come, first serve basis. So same things. You need to go to company.co.uk. Stay safe, and I'll speak to you later.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks lower across the board. The Dow, the S&P, Nasdaq all slumping after Fed Chair Jay Powell weighed an earlier end to bond tapering. Traders boosting their bets on the pace of interest rate increases. 10-year up 17/30 seconds. 10-year yield 1.44%. He also told a Senate Banking Committee that it is time to stop using the word transitory to describe inflation. S&P down 77, lower by 1.7%. The Dow down 592, down 1.7%. Nasdaq lower by 218, down by 1.4%. Again, the 10-year yield 1.44%. Spot gold down 0.7%, 17.72 the ounce. Big move for energy today to the downside. West Texas Intermediate crude oil down 4.3%. Natural gas down 5.1%, $4.60 per million BTUs. Lots of earnings coming up after the bell today, predominantly tech names: Hewlett-Packard Enterprise, NetApp, Global Foundries, Boxing, Salesforce, and Zscaler all scheduled to report. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Unsurprisingly, the Kyle Rittenhouse verdict exposed fierce divisions among Americans. On one matter, though, there ought to be renewed consensus. It doesn't help to have guns at protests. Unfortunately, armed demonstrators have become a familiar sight in the U.S. Researchers have documented gun-toting civilians at more than 500 protests over the past 2 years. They also found that demonstrations where participants are armed are nearly 6 times as likely to turn violent or destructive. Absent government intervention, more incidents like what happened in Kenosha are all but inevitable. Authorities need to recognize that protests are an inherently charged environment and do everything in their power to enact common-sense reforms before another demonstration becomes yet another site of needless bloodshed. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN GO on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10 minutes left in today's trading session. We are pretty much at our lows when it comes to the S&P and the Dow, a little bit off of it when it comes to the Nasdaq, but definitely it does feel like a recalibration when it comes to investors as they try to make sense of Jay Powell's testimony today, because he certainly seemed a little bit hawkish, but keep in mind, rates are still low. Let's see what Aaron Cannon has to say, co-founder and chief executive officer at Clear Harbor Asset Management, over $1 billion in assets under management. Aaron back with us on the phone from Stamford, Connecticut. Hey, Aaron, it's been interesting the last week or so, certainly concerns about the latest COVID variant, and then we had Jay Powell today. What was the most significant thing you think we got from the Fed chief?
Well, certainly the pivot around the acceleration of the taper. We knew the taper was coming, but the notion that perhaps they would accelerate it by 2 months just sort of suggests that Powell has pivoted from a belief that inflation is transitory to now being seemingly concerned about the sort of stickiness factor of inflation. Of course, you have the other headwind of the uncertainty factor around this new variant, and the question around transmissibility and lethality, and whether or not the current vaccines will prove effective or not. And so sort of the perfect elixir for higher volatility, which we've really seen now over the last several days. I think we bottomed on through this year and implied volatility at about 15, and it's up over 27 today. And as you noted too, long dated treasuries are lower today, even though Powell is seemingly concerned about inflation. So I think that sort of suggests to me that the market is maybe believing Powell around taper, but not so much around the idea that he can convey a more aggressive tightening program around a higher Fed funds rate in 2022.
So, Aaron, help me reconcile these competing forces happening right now. One is Fed Chair Powell's comments about taper, and the other one is about this transmissibility, or it's unknown, and the new variant running rampant throughout the world right now, and the concerns around that, because that could lead to shutdowns and it could lead to a decline in economic activity.
Yeah, Tim, that's a great question, because it's almost odd in my mind that Powell would decide this week to sort of pivot on the issue of inflation when there's really no new inflation data this week. And 2 weeks ago, he was a little more certainly in the transitory camp. So I'm a bit baffled by that, and I wonder if this is akin to the sort of taper tantrum of 2018, just before Christmas. With that said, the virus, at least at an anecdotal level, may be less lethal and yet is more transmissible than the Delta variant. Now, that's quite normal that this would occur as a virus is trying to sort of remain, quote unquote, alive in a population. Transmissibility tends to spread, and lethality tends to move lower.
Aaron, it says something, though, right, for Jay Powell, to Tim's point, that he was comfortable enough in, an environment where over the past 3 days we've seen volatility in a big way, and we've seen the concerns about the variant. But for him to still feel confident in his testimony and going before lawmakers to take the word transitory off the table, to say that we might speed up the pace at which we cut back on those asset purchases, does it speak to the underlying strength that he sees in the economy, even with all of that going on?
Well, I don't know is the short answer, but I must confess I'm sort of in the camp that still believes that if it were not for COVID, we would not have an inflation problem, and that if we do have a post-COVID world, if COVID can dissipate to the point where the global economy can normalize, and is that a 2022 event or 2023 event, we do not know, but I believe it is something for the future, that there is an episodic or transitory, or whatever term you want to use, nature to inflation. And bottlenecks should subside, and some of the sort of structural headwinds to inflation should also rear their head again, which is that, we do have an aging worker population. We do have a declining global rate of population growth more generally. productivity gains through technological advancements should prove disinflationary or continue to prove disinflationary over time. But there's also the other side of this that I think we need to be cognizant about, and maybe this is where Powell is right now, and that is there's a bit of a deglobalization effort underway where I think a lot of corporations are realizing that the notion of just in time may be less important than having as the phrase is just in case having production here in the United States or with our neighbors and not with a nemesis economically and militarily, and so that can be inflationary over time, and maybe that's a sticky part of this equation.
Hey, Aaron, we just have about a minute left with you, and I'm wondering if on days like today you're getting calls from clients because they're so used to seeing the stock market, at least in 2021, go one way, higher.
Yes, I mean, to be honest with you, our phones have been quiet on that front, and I think that's because we stay in touch with our clients. We have an asset allocation and a risk management framework that's unique to each client. And so the idea that a client may need cash today or tomorrow doesn't mean we run out and have to sell equities in this market today. That would mean, I think, that we're doing something quite irresponsible in the planning process. So I think our clients are probably reasonably calm about where things are. They know that volatility is a natural function of markets, but they also know that we're, looking after their asset allocation and that we're creating a risk-adjusted portfolio that's specific to them, both for the short, medium, and long term in their financial life.
Well, it's for me, it just feels like there's a recalibration of so many different things going on, whether it's in the energy markets, whether it's in demand, whether it's people leaving the workforce for good, and just different things going on. But we're definitely seeing things play out in the market. Hey, Aaron, thank you so much. Co-founder, Chief Executive Officer at Clear Harbor Asset Management, roughly $1 billion in assets under management, with us on the phone once again from Stamford, Connecticut. All right, folks, just a few minutes left in the trading session. We're pretty much bouncing around the bottom here on those major equity averages. Right now, let's get ready for Beyond the Bell. We're going to be joined by our Bloomberg TV team. We're looking at the close here on this Tuesday, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Shanali Bassick in for Caroline Hyde, counting you down to the closing bell on this Tuesday afternoon. Here to help take us beyond the bell, Carol Massar and Tim Stenovic bringing together our YouTube and TV and radio audiences here on a relatively down day here. The S&P 500 and the rest of the indices, Carol, right now near the lows of the day.
Yeah, absolutely. Bouncing around here at the bottom with just a few minutes left to go. What's really stood out for me is what we're seeing in volatility. If you take a look at the VIX over the last 3 days, we know we've seen some extreme swings in the equity trade, and that's definitely playing out in the VIX. I mean, that's kind of one thing we can count on, Tim, right now is volatility. It's something market watchers reminded us about earlier this year.
Yeah, almost every single stock in the S&P 500 is in the red as of now. 497 stocks lower, only 8 stocks in the green, Taylor.
And I think what's really interesting is what the bond market continues to tell us. Was it just a classic safe haven trade today, Shanali, of pulling into the world of bonds, or was it sort of pulling forward rate hikes and then lower growth, lower inflation expectations now on the long end?
Yeah, really, in safe haven in the stock market, less than a dozen stocks really sticking in the green, Pfizer, Apple, among them. Where do you find safety in this market?
Yeah, but look, I mean, when you put it in perspective here, you still talk about S&P that's up over 20% here on a year-to-date basis. You talk about individual movers here. I mean, you got something like 400 of the stocks in the S&P are still in the green, again, on a year-to-date basis. So despite the max drawdowns that we've seen here over the past, couple hundred days, when you talk about the declines that we've seen off those 52-week highs, you're still relatively in the green here, even though you are seeing red in your screen here on this day and on this month. Let's walk you through the numbers as we get the closing bells here. The Dow Jones Industrial Average, yes, we're going to quote it in points right now, Taylor, 642 points, down below where it started the day. That's down about 1.8%. We should point out that on a monthly basis, it's going to finish down the month of November by about 3.7%. The S&P 500 down about 1.9% on the day, now down about 0.8% for the month of November. The Nasdaq Composite Composite down 1.5% on the day. It's still going to hold on to a gain for the month of about 0.2%. We should point out the Nasdaq 100 higher by about 1.8% on a monthly basis. And let's take it the Russell 2000 here, because it is right now in correction territory. It has dropped about 10% from its most recent high. It's down about 2% on the day and 4%, Carol, on the month.
But as you mentioned, you take a look at those year-to-date numbers and you remind everybody how much we've seen in terms of the equity markets, and maybe there's a bit of a recalibration going on, Taylor. Just at the S&P 500, though, as Romaine was breaking this down.
Carol, did you know that Jay Powell is now a new man, according to Taylor?
How is he new?
I don't know.
Is it because of?
I heard a different tone of voice out of him today that I have in some of the previous
It says it right there on the screen.
meetings.
Hawkish tone surprises traders for our radio.
See? Told you.
I think he's still the old Jay. He's just feeding us stuff to get us used to what's coming next, you guys.
Carol, I really like that you talked about sort of on a year-to-date perspective. What's interesting is if this board were year-to-date, everything would still be on the green. Unfortunately, we're looking at a one day and everything is pretty much in the red. And it's actually sort of similar to the reverse of what we did yesterday when everything also was in the green. Let's just take a look at the one gainer on the day, and that is tech hardware and some of the equipments, which really shows perhaps some of the defensiveness that technology is still providing. Romaine was smart enough to really talk about Apple is still actually one of the few stocks in the green on the day. Otherwise, unfortunately, it is pretty much a sea of red if you were along these markets. What's interesting is it's not really a bond story. Utilities and telecoms and media, traditionally those that benefit from lower bond yields, are actually some of the worst performers. You're off about 3% or so, Carol.
Yeah, and you talk about Apple. That is certainly one of the standouts, and that's one of the gainers. It was really hard to find gainers today in this broad-based sell-off, but I'm going to start with
3 of them.
I did. I know how to find them. Pfizer was up 2.5% in today's session. We got to start there. It was one of the top names in the S&P 500. Looks to be closing out November with its best monthly advance in about 30 years. I think it's up about 24 or so percent as it settles in here. Last time Pfizer was this hot, folks, George H.W. Bush was in the White House. Treasuries yielded more than 7.8%. How about that? For some
what was the number one album that year?
I don't know. Was it like Wham or something? Oh, yeah, you had to go there. All right. Apple was up 3.2%. Romaine mentioning this one. Take that tech sell-off because Apple seemed to squeeze out a gain here. Hard to say what the catalysts were. We did see Apple's iPad sales rising 33% in Western Europe in the third quarter as the market declined 20% year over year. This was according to an Apple Insider report. So maybe some of that's going on. Some technicians saying that maybe there was a bit of a technical breakout when it comes to Apple
up 10% on the month too.
Exactly,
yeah,
and that's why
it's
above its 90-day, 30-day, and also if you look short-term above its 10-day moving average. So maybe there's some technical moves there. Got to just mention a small cap if I may, because it was really hard to find gainers.
Yeah.
Immunogen, I can't say that right. Soaring, it was top in the Russell 2000. It's about a 1.2 billion market cap. Their pivotal ovarian cancer trial meeting a goal and way to RBC raising its price target. Stock was up almost 30%.
While we're on the greens, before you go to Tim here, what do you think the best performing stock in the S&P 500 in November was?
Was it Moderna?
It was Qualcomm, up 36%.
All right, yeah. NVIDIA is probably doing pretty well.
Maybe you'll get it next month. There'll be a
pressure. All right, let's go to decliners.
Thanks for mentioning Moderna, because that is one of my notable decliners on the day. We did hear from Moderna's top executives over the last 24 hours that they reiterated that the Omicron variant's many mutations suggest that new vaccines will be needed. That not only triggered a drop in Moderna stock, but also before Fed Chair Powell's comments, that was kind of the narrative that what led to lower markets throughout the morning. Regeneron shares closing down more than 2.7%. Regeneron Pharmaceuticals saying that it's conducting further testing after early evidence suggested that its antibody therapy for COVID-19 may actually be less effective against the Omicron variant than against other
talk about
variants.
AT&T. This is
let's talk about this one. I'm glad you're interested in this one, Romaine. It was actually tough to pick decliners today, and I had a little chat with Carol. I said, I got to include AT&T because hitting its lowest levels in 12 years, all because of comments that the head of the wireless business made at a Wells Fargo conference today saying that, hey, we're going to see the surge in customers this year is going to cool off.
It's like peak customers or something.
Yeah.
Yeah, I don't know. Does this mean everyone just has a cell phone now? They don't need anything else?
Yeah.
I mean, when you look at inflationary pressures, one area that they've pointed to that hasn't had inflationary pressures is how much it costs consumers to have wireless communications devices, despite the fact that there are only 3 major players.
Remember when the Fed was looking at
cell phone bills?
It's cell phone bills.
My cell phone bill's through the roof.
Sort of
what are you talking
yeah.
about? No inflation.
It's all about the family plan.
All right,
it hasn't
Taylor.
gone down.
Are you still in Team Transitory, Taylor? Or have you jumped off?
Romaine,
permanent.
you tell me.
I heard.
I told you 6 months ago this doesn't feel transitory, and you told me it was going to be as transitory as my cauliflower rice. Should we go to
Guess what?
Salesforce, Romaine?
Did
Save
you
us.
also
Did
make
you know
the
that-
comment that people didn't maybe understand what transitory meant?
Yeah.
I mean, what is transitory? Do we know? Is it one month? Is it
let's
6
let's continue this conversation just real quickly because we were just flashing for our TV audience, our radio audience, a Salesforce on the screen. Shares slightly down in the post market here. They did actually provide earnings today. They reiterated their guidance here for the fiscal 2023 here. Their 3Q numbers though for the current year, a beat 127 versus 92 cents on adjusted EPS, and the revenue pretty much in line with estimates at about $6.86 billion. It looks like their 4Q revenue forecast relatively in line with estimates. Look, we got to get back though to the inflation debate here, and I think Carol, you made a good point here about I think not only what Jay Powell said, but why he chose to say it in the form that he did. This wasn't in his prepared remarks. This was a response to a question, and it sounded like he was ready to answer that question. And I just wonder why we didn't hear this in a more formal, I guess, environment.
Well, I also think that's a really good point. Like, this seems like a major policy. And, the debate that we've seen on radio and TV today is that some say, no, it wasn't such a big deal. Others said, yeah, it was a big deal. I think it's significant that he felt comfortable enough and with all the market jitters to actually come out and say, yeah, it's time to retire the word transitory. And, hey, we may do the, asset purchases, backing off on it. We may do it even faster.
And what does it mean when he says a few months earlier? I think the vagueness of that rattled a lot of people, too.
He also said perhaps, right?
Yeah,
so,
it wasn't
there's a
anything
lot of
definite.
wiggle room in that.
And I also think the timing of this is really notable because we have this Omicron variant making its way around the world. It's leading to shutdowns in other parts of the world. And there are concerns about a decline in economic activity as real. I mean, look at oil and what oil did today. So
Well, you got
I think it's notable
Omicron,
that
and
these
then you got
things
the
are
president
happening
trying
at
to
the
push
same
through
time.
more fiscal spending. So it's a lot of mixed messages here for the market.
One thing the market is not getting a mixed signal on, Carol, and I'll punt this on over to you, is the 2-year, 10-year yield curve down below 90 basis points at 88. That's the lowest, sort of the...
That's a flattening, right?
The flatness.
And it's a flattening because the 2-year went up, right?
Yep.
Yeah.
Right.
I
And the
got that.
long end is
That's-
going down. But
level
that's
2
the
and
most
3.
that we've seen now since March of 2020. So if that's sort of signaling where we are in this economic cycle, what cues is that bond market telling you? And to the credit, the bond market had been sort of hinting at this for a little bit, Carol.
Absolutely. It's why we have to be really smart. We watch the equity moves, we get it, but you have to keep an eye on what the bond market's doing. It often is great in terms of indicating what's going to happen in the economy. But keep in mind, even as rates move up, guys, we're still really low on a historical basis.
All right.
Do we have to run? I guess.
Well, inflation, look, I mean, oil dropped 20% this month, right? We're back
Huge.
below 66, so problem solved, right?
But it's confusing messages, and I think that's why the markets are confused, and that's why you see more
This puts a
volatility.
lot of weight on that December 15th meeting, Carol.
Yeah, exactly. It's going to be really key in terms of the messaging. All right, guys, we got to run. We got to wrap it up. Have a good night, everybody. All right, that's going to do it for our market wrap coverage, our Beyond the Bell coverage live on radio, TV, and YouTube. We'll see you again, same time, same place on Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we did get some earnings out. You have Salesforce down about almost 6% in the after hours. HPE looks like it's not really moving here in the after hours.
Yeah, I'm going to go back to Salesforce very briefly, Carol. Mark Benioff saying in a statement that they delivered another phenomenal quarter, fueling strong revenue growth, margin, and cash flow. Salesforce is more relevant and strategic than ever. The company is saying, the CEO is saying that we're on track to reach $50 billion revenue in fiscal year 26.
HPE sees first quarter adjusted EPS 42 to 50 cents. The estimate out there is 49 cents. So we're watching that. And I think we also did see, was it MasterCard boosting its quarterly dividend to 49 cents a share from 44 cents and talking about an $8 billion share repurchase program. Quick check on that stock in the after hours, and we're seeing that stock up about 1%. All right, Nancy Lyons, take it away for World and National News.
Thanks, Carol. Authorities say a 15-year-old sophomore is in custody after he allegedly opened fire at his Michigan high school outside of Detroit. Mike McCabe is the Oakland County Undersheriff.
We have 3 deceased victims right now. who are all believed to be students. We have 6 others that were shot. 1 was a school teacher. They're all at local hospitals.
McCabe says they are unclear about a motive. The CDC is considering tightening travel recommendations and rules as health officials try to slow the COVID-19 Omicron variant's entry to the U.S. CDC Director Rochelle Walensky says the U.S. will increase testing for international arrivals.
CDC is expanding a surveillance program with Express Check to JFK, San Francisco, Newark, and Atlanta airports.
Walensky says at this point the Delta variant remains the dominant strain in the U.S. President Biden today has signed 4 veterans-inspired bills into law. One addresses maternal health care for veterans. Another allows veterans to pay in-state tuition to attend any public college or university. There's also one to find out why black veterans are not treated the same as their white counterparts.
This bill will help us understand how this happened, keep better records, expose the facts to the light of day, and allow us to do the necessary work making sure that all of our nation veterans, all of them, are treated with equal dignity and equal equality.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Carol Masser live in the Bloomberg Interactive Brokers Studio in New York. Carol, did you buy anything today? Cyber Monday. Oh, yesterday was Cyber Monday. Sorry, Carol, did you buy anything yesterday? It was Cyber Monday. Try that again.
I actually did some shopping on. I forgot it was Cyber Monday, and I had to do something Tuesday. I did not buy my diamonds. I did do some shopping for my daughter. It's a little
Is she
crazy.
listening? Can you?
I don't think she's listening.
Okay.
As much as she's supportive of what her mother does. I don't know that she's listening to me on air right now.
All right, well, let's talk a little bit about what's going on because we're getting the data in. So Cyber Monday misses estimates on short supply and weak deals. Final sales for Cyber Monday fell short of estimates and didn't surpass last year's records. This is lackluster sales and scarce inventory kept shoppers from breaking out their credit cards during the start of the holiday shopping season.
Yeah, U.S. shoppers spending about $10.7 billion on Cyber Monday. This is according to Adobe, less than the $10.8 billion that we saw a year earlier, and missing Adobe's estimate of $11.3 billion. Adobe said that it still remains the biggest shopping day of the year. Consumers spent $12 million per minute as the clock ticked on the final sales of the day.
Okay, so what was it? That's the question. Well, shipping bottlenecks and supply logjams causing problems for shoppers. The occurrence of out-of-stock messages. This is some really interesting data.
There is something I tried to buy, and it's like, we'll let you know when it's in stock. Actually, there were a couple things that I really had to scramble for.
Did you end up finding
for my daughter? One, yes. And one, no. I'm on like a mailing list waiting for it to restock.
So I'm thinking about this in the context of I'm a cyclist and cycling, and people
or
ask
Santa's waiting for it to restock.
Right.
I'm just kidding.
They ask me a lot about bikes, and one thing that's been happening in the bike industry this year and throughout the pandemic is if the model that you want isn't available, oftentimes people will buy the higher version, like more expensive version of that, because their demand will be there, but the supply won't.
Okay.
So they'll end up spending more and buying a more expensive version of the product because a certain product is out of stock.
That's interesting, which is then ultimately good for bottom lines.
It is.
Right? And you're probably making a bigger margin potentially.
And you're getting a better bike. And that's cool.
Define better. No,
faster, lighter.
You're listening to Bloomberg. We're going to talk more about sales.
Okay, traders, position open on Bitcoin. Let me show you. It's just right here. I will place an arrow. Well done, guys. So stay with me. I don't think I'm going to sell it today. I will hold it probably until tomorrow. I will see. But the 45 minutes left until the market close. So I probably will hold it until tomorrow, and we will see how Bitcoin will react on today's news, everything, and we'll trade Bitcoin tomorrow. But as you can see, as soon as we fill the order, it moved lower. So we're already in profit. Okay, guys, well done. Stay with me. Join us tomorrow as well for more trades. But we're still on for 45 minutes. So anything can happen. So I'll speak to you later, guys. Well done. Good.
6.5%. It did report subscription and support revenue for the third quarter that met the average analyst estimate. It's also promoting Brett Taylor to vice chair and co-CEO along Mark Benioff. He was president and chief operating officer, but again after hours, Salesforce CRM on the ticker down now by roughly 6%. Hewlett-Packard Enterprise delivered a lackluster quarterly profit forecast, hurt by the increasing cost of components for its computer equipment amid industry-wide shortages. HPE now down by about 3%. Down day on Wall Street with the Dow, the S&P and Nasdaq all slumping. Stocks sank after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their wagers on the pace of interest rate hikes. Powell also told the Senate Banking Committee it's time to stop using the word transitory to describe inflation. S&P down 88, down 1.9%. The Dow down 652, down 1.9%. Nasdaq down 245, a drop of 1.5%. 10-year up 17.30 seconds. 10-year yield 1.43%. Spot gold down 0.7%, 17.72 the ounce. And West Texas Intermediate crude down 4.5%, 66.82 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Shopify out earlier today saying that Black Friday Cyber Monday sales hit a record $6.3 billion, climbing 23% compared with the same period a year earlier. So, Tim, let's get into what's going on when it comes to the shopping trends that we've seen so far early in this season.
Harley Finkelstein is president of Shopify. He joins us on the phone from Ottawa. Harley, great to have you on the program today. So take us through the data here and really why we're seeing this dichotomy, because Carol and I were just talking about the data that we saw from Adobe showing that Cyber Monday sales were kind of weak here. So how do you reconcile those two things?
Great to be on the show, and it is quite remarkable. I mean, I think what you were seeing is that Shopify merchants really outpaced the industry at frankly, these astonishing rates, and they continue to do so through the entire weekend. We know that consumer spending has stayed strong, but I don't think the FCM was simply just a measure of consumer confidence. It seems like it was also a barometer for consumer interest in supporting independent brands and entrepreneurs, and we think that support is stronger than ever. For the entire weekend, so from Friday to Monday, we saw about 6.3 billion sold sales on Shopify. That's about 23% growth, as you mentioned. And about 47 million consumers made a purchase from a Shopify merchant during the weekend. The other thing that's really interesting is that average cart size was up from about $90 to about $100 globally. And when you look at, where those sales were coming from, of course, we had the big names that we always talk about here, companies like Allbirds and Bombas and Gymshark and Brooklyn. But we also saw some new names emerge, The Nugget, for example, Our Place, for example, and then some traditional retailers that use Shopify like Lego, Mattel, Spanx, Dockers. But I really, relative to the numbers that you were mentioning earlier from the industry-wide, it feels like this is a tale of two different retail worlds. Well, on one side, you have traditional big box stores, but then you have direct-to-consumer.
Well, let me just remind our listeners of those numbers from Adobe. So U.S. shoppers spent $10.7 billion on Cyber Monday. That's according to Adobe, less than the $10.8 billion a year earlier, and that missed Adobe's estimate of $11.3 billion. So, Harley, it sounds like the analysis that you're providing is it's because it's a different type of shopping happening. You're saying that Shopify, retailers that use the Shopify platform outperformed the industry, and that's why you see the dichotomy and the divergence with the data from Adobe.
That's exactly right. Yeah, I think, for Adobe's first of all, only looking at U.S., where Shopify is a global platform. We have more than 1.7 million stores across 175 countries. But what we really did see is that consumers unequivocally voted with their wallets this past 4-day weekend to buy from independent retailers and their favorite brands. And, some of these brands have now become really incumbents. If you look at companies like Figs or Allbirds, these are stores that started on Shopify just a couple years ago, and now they're publicly traded companies. And so I think you're going to see more of this happening, where the future of retail really does belong to these independent direct-to-consumer brands, as opposed to the big box retailers, in some cases that aren't really adding any real value.
Yeah, it's an interesting, we talk about innovation, as you know, Harley, so much in so many different industries, certainly in technology. We've seen it in retail in a big way. What does that mean then, you think, for the major retailers that are out there versus many of those that are on your platform? Is there something more significant going on in terms of the retail trends?
Well, look, I've been a student of retail and commerce for the majority of my life. And I think one of the major changes that have happened here is that a lot of the retailers that were reselling other people's products simply weren't justifying their profit margin. So, I'm sitting here right now in Canada wearing my favorite T-shirt, which is James Purse, which is a Shopify store. Years ago, I was able to buy a James Purse T-shirt at Barney's, for example, and I never did. And the reason was I didn't feel that I was getting a better experience, and it was certainly more expensive buying from Barney's. Whereas when I go to jamespurse.com, powered by Shopify, I get a much better experience. I know that the money that I'm paying for is a vote with my wallet that I want more of those brands to exist in the world. I think the other thing is that the big box retailers, for a very long time, they had an unfair advantage because they had distribution. And the reason that we were going to these big box stores is because they were in our cities. But the internet has completely democratized distribution, so that today I can be sitting anywhere in the world, and for $29, I can set up a store on Shopify, and I can sell online, I can sell offline, I can sell on TikTok or Spotify or Instagram, and I can be default global within a matter of minutes. That's where technology is driving this really incredible innovation in commerce.
Harley, you mentioned Allbirds, the company just reporting earnings a few minutes ago, by the way. Figs, also a newly public company, as two organizations that use Shopify's platform. How do you make sure that these companies, as they grow, don't graduate from Shopify's platform and they're able to keep using it?
It's a great question. The challenge of being able to make it really easy for any brand or any entrepreneur or business to get started on Shopify, and then when they get to some sort of scale, they continue to grow. That is really what makes Shopify quite unique. So, for example, when you're just getting started, you may just simply want to set up a very simple online store and sell to consumers. But as you grow, you begin to wanting to sell across a variety of different places, channels. I mentioned Instagram and Facebook, but also you want to sell across new channels that emerge. We announced a partnership 2 weeks ago with Spotify, so that artists on Spotify can open online stores on Shopify and sell merchandise. This idea that you can sell anywhere you want across every geography is really important, but also scale is important. Jimmy Butler recently launched his new coffee line, Big Face Coffee on Shopify. Right. Kylie Jenner launched Kylie Cosmetics on Shopify. These are massive flash sales, and the infrastructure that is required is such that it has to withstand that. So the idea of getting started, making it easy and scale is also really important. That's what scale does.
Harley, have a good holiday season. Hopefully we can check back with you again. Harley Finkelstein is president over at Shopify, on the phone from Ottawa. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Really looking forward to our next guest. Ali Goldstein is going to be with us. She's president of L'Oreal Paris USA. They do this incredible program, Women of Worth, and we're going to talk about how it really just acknowledges some incredible, incredible women.
That's happening in just a couple of minutes. In the meantime, a check of business news. Here's Charlie Pellet.
And I thank you very much. Here's what's going on. Lots of earnings after the bell. Sales forecast out with adjusted EPS for the fourth quarter. That guidance did miss the average analyst estimate. Also named Chief Operating Officer Brett Taylor as co-CEO along with co-founder and chairman Mark Benioff. Shares after hours of Salesforce.com down now by 6.5%. HPE, Hewlett-Packard Enterprise, out with a lackluster quarterly profit forecast. HPE down 3.1% after hours. And the New York Attorney General is filing a motion to force Amazon to implement COVID safety measures. Amazon down by 1.5%. Stocks fell after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their wagers on the pace of interest rate increases. Powell also told a Senate Banking Committee it's time to retire the word transitory when describing inflation. S&P down 88 today, drop there of 1.9%, closing at session lows. The Dow down 652, down 1.9%. Nasdaq down 245, a drop of 1.5%. 10-year up 13.30 seconds, 10-year yield 1.45%. Spot gold down 7 cents of 1%, 17.72 the ounce. West Texas Intermediate crude tumbled 4.6%, 66.70 a barrel. Natural gas down 5.2%, 460. Natural gas down 5.2%, 460 per million BTUs. Well, it was a down day for the Dow, the S&P, and Nasdaq. Aaron Kennan is CEO at Clear Harbor Asset Management. And right here on Bloomberg Business Week, he told us some of Powell's testimony today left him scratching his head.
It's almost odd in my mind that Powell would decide this week to sort of pivot on the issue of inflation when there's really no new inflation data this week. And 2 weeks ago, he was a little more certainly in the transitory camp. So I'm a bit baffled by that. And I wonder if this is akin to the sort of taper tantrum of 2018 just before Christmas.
AT&T shares now at a 12-year low after Jeff McElfresh, the company's chief executive officer of communications, told investors at a conference he expects customer growth to slow in 2022. AT&T down today by 4.4%. Recapping 10-year yield 1.45%, S&P down 88, down 1.9%. And that's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So L'Oreal Paris has been highlighting remarkable and inspiring women through its Women of Worth program. Let's find out a little bit more about it. Lucky to have with us Ali Goldstein. She's L'Oreal Paris USA president, and she's joining Tim and me in our Bloomberg Interactive Brokers studio. First of all, so great to have you here. How are you?
Good. Thank you, Carol and Tim, for having me. It's a pleasure to be here to talk about this program.
And it's been going on for several years. Yes. Remind our audience what it's all about.
So this is the 16th year that we are doing this program. So it's been quite a long time. So the program is called the L'Oreal Paris Women of Worth program. It's our signature philanthropic event where we recognize extraordinary women who are doing things in their communities, giving back and helping those that are less fortunate. And
it's often women who've gone through some incredible tragedy.
Yes. For the majority of the women, their causes, and these are causes and foundations that they create. They're nonprofit organizations. And for many of them, they come from personal stories. So tragedies or problems that they or their family have experienced. Right. And that becomes the root of creating a program to give back to others and helping people like them to get through these sometimes terrible events.
How does the selection process go?
So the way it works is at the beginning of each year, we do a call for nominations. So we invite the public to nominate. Women can nominate themselves, or people can nominate other women. We have an application process that's available through our website. This year, we received over almost 2,000 applications. So we get quite a range of applications. Right. And then we invite our employees and our partners that we work with to go through those applications, and then we narrow them down to a short list of, a smaller set. Then we have a panel of judges, of which I'm part of it. Prior honorees are part of it. Industry leaders that we work with, that L'Oreal Paris works with. So there's about 10 of us who vet through the finalists, if you will, and we select the final 10 honorees. So each year it's 10 honorees. So because it's 16 years, we're now up to 160 women that we've recognized in the last 16 years. And they're pretty fantastic women.
Well, and full transparency, pre-pandemic, I was honored to be involved with it and was able to present for a couple of the dinners that you used to do to honor these women. But what really struck me is that these were individuals, as you said, like tragedy or something happened in their lives, and they were able to turn that tragedy into awareness and into helping others. Give us an idea of some of the women. There's Brianna, there's Natalie, and some of their causes.
Yeah. So this year, the range of causes is quite diverse, and we actually look for a diverse range of philanthropies that they work with. So this year, some of the women we recognize, for example, a woman named Natalie Wilson, who leads an organization called Black and Missing, the Black and Missing Foundation, and it's she helps bring awareness to locate missing Black women. And what we have understood is that Black women who have gone missing have a much lower likelihood of being found because of how the structure of our country works. And so she brings awareness, so she uses social media to get out awareness and help find these missing individuals. So that's one organization. We have another organization called Soar Over Hate. A woman named Nancy Tran has founded that. And that organization is helping older Asian Americans protect themselves against xenophobia. And we know that's become so prevalent through COVID especially. So there's quite a range. We're dealing with issues. Some are dealing with issues of mental health among teenagers. A woman who started that organization, her son unfortunately committed suicide, so now she's helping other families who are facing that issue. We have causes ranging from cancer support, food insecurity, so it's quite a range, and we look for diversity.
And I feel like it's like so many of the issues that some of them that we've talked about certainly over the year, and certainly under the pandemic. Sit tight for a second. Yes. We want to talk some more about it and what you folks are doing to really raise their profile, because that's what it's about. They're doing these incredible things, but you guys are really making their voice even louder.
And one thing I'm interested in hearing about in just a few minutes is how things changed during the pandemic and how this year's event is different from years past.
All right, we're going to come back with Allie Goldstein. She's L'Oreal Paris USA president. She's in our Interactive Brokers studio. We'll continue with her in just a moment.
In the meantime, let's head to Washington, D.C. Nancy Lyons is standing by in our 99.1 newsroom for a check of the latest world and national news. Hey, Nance.
Thanks, Tim. The Treasury Secretary is sounding alarms about the U.S. debt limit during a Senate hearing today. Janet Yellen said the U.S. will default on debt obligations if the debt limit is not raised or extended by December 15th.
There would be scenarios in which Treasury would not have sufficient funds to continue to finance the operations of the U.S. government beyond that date.
Yellen says a default on the U.S. debt would eviscerate the ongoing economic recovery. Senate Republican leader Mitch McConnell says the U.S. will not default on its obligation, and he's in talks with Majority Leader Chuck Schumer on a path forward to extend the limit. President Biden is in Minnesota this afternoon, highlighting the infrastructure law he signed 2 weeks ago. The roughly $1 trillion package is focused on improving roads, bridges, and public transportation. The other signature proposal in Biden's agenda is the Build Back Better plan, which appears stalled in the Senate. And even if it does pass this year, Bloomberg's Nathan Hager reports it'll take years to set up some of its most popular provisions.
One of the president's biggest promises is that his agenda would cut child care expenses nearly in half. But the official who oversaw federal child care programs under the Obama administration tells Bloomberg even if Build Back Better passes this year, it could take up to 4 months for the federal government to issue guidance. Then there are state budgets to consider. The official says it could take some states up to 2 years just to figure out how to pay child care workers a living wage, when some of them make less than retail and warehouse employees right now. In Washington, I'm Nathan Hager, Bloomberg Radio.
Authorities say a 15-year-old sophomore opened fire at his Michigan high school, killing 3 students and wounding 6 other people, including a teacher. He's now in custody. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovec. We're still here with Ali Goldstein. She's L'Oreal Paris USA president. And Tim was noticing that you've been at L'Oreal a long time.
Yes. So this is my 20th anniversary with L'Oreal. I started my career following business school with L'Oreal, and I've been there the whole time, 20 years, grown up through the marketing ranks.
What was your first job there?
My first job was assistant brand manager on Preference Hair Color.
Oh my gosh.
Which is actually, so it's actually very infamous that it's that, because Preference Hair Color is the brand that started the tagline, because you're worth it.
Mm-hmm.
So it's really very emotional for me to have started there, and now 20 years later to be leading this business.
Well, it's so interesting to look at the experience you've had, because you were also part of L'Oreal Paris Facial Skincare, Maybelline, Garnier, then you were part of the Consumer Products Division and New Ventures.
Yep.
And I'm wondering what you would say to somebody who's early in their career, perhaps just graduating from business school right now, and they see a company that they want to spend their career with. How do they work their way up?
Yeah. So I think for me, and people ask me this all the time, how are you still here? And I think clearly there's sort of the fundamentals: hard work, build your relationships, be collaborative, listen. I think a lot of it is have some humility and be flexible. So the path that you think you're going to take is never the one that actually happens.
Great point.
And be open to ideas. One of the reasons why I've stayed at L'Oreal is because every time I sort of was bored or I had plateaued, there was always a new opportunity, which is why I was able to move around and work on different businesses and take more responsibility. But it was never what I thought it was going to be. It was like, you had to have a leap of faith a little bit and trust the organization and sort of be flexible, be open to trying new things, and see where it goes. So each move was almost like having a new opportunity at a new company within the security of a big organization.
It almost has like an entrepreneurial nature that you're able to try something new. Sit tight. We're going to come back and talk more with Ali Goldstein, president of L'Oreal Paris USA. This is Bloomberg.
Plus, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A Powell pivot and stocks sold off. Stocks sank after Fed Chair Jay Powell weighed an earlier end to bond tapering, with traders boosting their bets on the pace of interest rate increases. Powell also told a Senate Banking Committee today that it is time to stop using the word transitory to describe inflation. His remarks were carried live here on Bloomberg Radio. S&P down 88, a drop of 1.9% today. The Dow tumbled 1.9% as well, down 652 points. Nasdaq down 245, a drop of 1.6%. 10-year up 14/32, 10-year yield 1.45%. Spot gold down 0.6%, 17.73 the ounce. West Texas Intermediate crude down 4.3%, 66.95 for a barrel of WTI. Natural gas down another 5.2% to 460 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Ali Goldstein. She's L'Oreal Paris USA president. She's here in our interactive broker studio. We've been talking about the Women of Worth program. As you say, it must be hard to select because you have to whittle it down to 10 because so many of these causes, whether it's education, whether it's food insecurities, I mean, they are all dealing with such important issues.
Yeah, and it is hard. And we spend we spend hours actually, vetting the women. We read all of their bios. We look at websites. We really investigate and do our research to understand, and we try to measure the impact they're having. We look, it's also what are the women doing? What are the impact that they're having? How do we ensure we have a diverse range of causes? We also look for diversity of the women themselves, age, ethnicity, geography, to make sure that we can recognize a range, because we have so many consumers and we have so many employees and everyone's passionate about a different thing.
Right.
And so that's also part of it is, I guess you could say as a company, L'Oreal Paris had a choice. Do we stand for one cause or do we find a way to reach many people across different causes? And we chose the latter route, which we're pretty proud of.
Right, right.
You bring together extraordinary women from all over the country each and every year, and I'm wondering how they're able to use this as a way to network with people who have had similar experiences, people who run similar organizations, and then they take that experience and then move on and create this network that lasts years.
Absolutely. So the way it works is, as L'Oreal Paris, we try to provide more than just a financial reward for these women. So we actually, as a company, bring our resources as a company to give them education and mentorship. And we also, we like to keep the alumni of the program as a network. So it's not one and done. It's these women, these 160 women are now part of this very special group called the Women of Worth, and we try to keep in touch with them and see how they're doing throughout as the years progress, and partner women with similar types of causes, because some are more advanced in their philanthropy, some are just starting, and they can learn from each other. So each year we also do an educational summit where we bring the current year's honorees together and we provide education, but we also bring back some of our alumni as well and provide support. So it's much more than dollars. It's also lots of networking, as you said, education, and of course awareness.
What's the impact of the platform that you give these individuals and all of the women over the last, 15, 16 years?
Yeah.
What's been the result of, their connection with you and the platform that you provide them? And I know you guys have now do a program, a television program. Tell us a little bit about that.
So last year we shifted how we brought awareness to these women. Partly it was linked to COVID, but in the end we feel it was absolutely the right thing to do. And we really wanted to bring some scale and broad awareness to these fantastic women. So we partnered with NBC to create a 1-hour primetime TV special where we worked with our L'Oreal Paris spokespeople to interview the women and showcase what they do in their communities. We brought film crews to their communities so they could see the people that they were impacting and really showcase their work. So that was, last year was the first year we're doing it. We're super excited that we're doing it again this year. So if I could plug, the show this year is will be aired on December 16th, 8 o'clock on NBC. If you'd like to watch it, I encourage whoever's interested to tune in. It's a fantastic program, and this year actually we were able to bring all of the honorees to Paris to film the show in the heart of the city where L'Oréal Paris was founded.
Oh my God.
So what a special experience for the women. And they were able to meet our spokespeople and have a very special experience from L'Oréal Paris. So they were able to meet each other and network and have this special trip to Paris. We filmed the show, and now it's all being put together. So it's pretty fantastic, but it's really about bringing awareness to the women and their causes and giving them a national stage. And in the past, for some of these women, they've really gone on to do amazing things with their causes. We've had one woman receive a Nobel Peace Prize. We've had 2 women receive presidential medals. We've had women go and work with their senators to create legislation through Congress. So we think we have a pretty good track record. The women have really done some outstanding things.
Well, and it's interesting too, and you talk about, I know some of these causes, right? I mean, women have gone on to raise lots of money for their cause, and really, whether it's, cancer progress with kids and so on and so forth, like it's really remarkable. And as you say, like there's a lot of things sometimes you think there's attention or time spent on something, but there's no payoff. Yeah. And it's really wonderful to see that by raising these women up and giving them the platform connected with you guys, that they're able to then make some significant inroads.
Absolutely,
it's like
absolutely.
Remarkable.
And this for us is really important. So over the last 16 years, we've contributed over $2 million towards these women's organizations. This year, we actually decided to double the investment because we believe it's that important. So historically, we've given, it's not a huge amount, but each year we've given each woman $10,000. This year, we've doubled it to $20,000. The national honoree will get another $25,000, and hopefully with the spotlight of the NBC special, we'll have support from consumers as well and others.
Okay, so don't judge me, but I'd be like killed by my producers to have you in here and not ask about kind of the environment.
Okay.
How is like the world, like how do you see the world right now? Like we have lots of like volatility within the markets and so on and so forth. How does it feel right now?
So it's still very volatile, right? Every day, who knows what we're going to face? But I'm optimistic. Within the beauty industry, we're optimistic. It's the holiday season. People are back using makeup, buying makeup. We just went through, the Thanksgiving weekend.
Was it busy?
People are shopping, which is very encouraging. And I'm optimistic that people are seeing the light at the end of the tunnel. Whatever that light may be, it's a new normal that we don't know yet.
Right.
But I'm optimistic that things are getting better. At least we see our consumers wanting to get back to some normal life.
Yeah.
And so it's volatile, as I said. Every day can be challenging. Lots of issues, of course, that we're all facing.
Right.
But we are excited, and our offices are open, and we're happy to be back engaging with people live.
When is the special again on NBC?
December 16th, 8 p.m.
All right, good. These are remarkable women. Take my word for it. Take Allie's word, really, for it, because it's been year after year of them doing incredible stuff. Thank you so much. Allie Goldstein, she's president of L'Oréal Paris USA, talking about their Women of Worth program.
I want to get to some breaking news. FDA advisors say the benefits of the Merck COVID pill outweigh the risks. Merck shares jumping 1.5% post-market. The FDA advisory panel votes 13-10 to back this COVID-19 therapy. Shares just bouncing in after hours trading.
All right, good to note. Let's check in with Joe Matthew, host of Sound On, getting ready for his broadcast. Hey, Joe.
Hey, you guys hear that testimony? A lot of breaking news today. Powell yelling. We're going to go through what we learned and talk to a congressman from Oklahoma, Frank Lucas, House Financial Services. He'll get his hooks in Powell and Yellen tomorrow.
We're retiring the word transitory, Joe. That's what we're doing. All right.
Can't say it anymore.
For the whole Bloomberg Business Week team, have a good evening, everyone.